What is up, everybody? Happy Thursday. How are we doing? Spencer Israel here. Welcome to another episode of Benzinga Live. This is our final, I'm not Benzinga Live. What am I saying? All Access. Come on. All Access. Our final All Access show of the year. We're off to a great start here. All right. Welcome, everybody who's coming over from pre-market prep. Great to see you. Here's the plan for the next couple of hours. We're going to be doing a series of interviews with executives, founders, about them and their company. What's up, Moises? How are things down in Sao Paulo? So that's how things are going to go. And 9:40, starting at 9:40, we'll be doing interviews, 20-minute conversations with these people. We will be taking a break at 10:20, at which point I'm going to bring on Mitch, and we'll talk markets. So we're gonna have like a market check segment here, where we take a break from the conversations and just do Mitch and I talking about the market, what is up, what is down, stocks, crypto. We'll take questions from the chat. So we're trying to experiment with this show a little bit, find out what works, what doesn't work, and what we definitely want to start doing is having more breaks, so it's not just an endless parade of conversations here. So I've got like 8 interviews on the docket for today. We've got some venture companies, we've got biotech, we've got real estate. I mean, we're running the gamut here. And if you've never seen this show before, quick rundown of what we're doing here. All right. The purpose of the All Access show is not to talk about a given company's stock. It is not to analyze their stock. It is not to predict whether a company's stock is going to go up, down, sideways, left to right, whatever. Right. The purpose of this show is to step away from that for a second and just talk about the story of the company, and in some cases even the founder, right? The story of the founder, the story of the company, though. Like, they're here to sell us, right, on the idea of their company, right? What is the growth story? Where have they been? Where are they now? Where are they going, right? They don't know what I'm going to ask them. And the best part is they don't know what you're going to ask them, because you can ask questions in our live chat. I see a bunch of you in chat right now. What's going on, everyone? If you have a question of any company that we have on the show today, drop it into the chat. I will ask it if it's not, asking bad faith. I will ask your question. So hang out in the chat. Of course, the chat is not just used for that. I want the chat to be active. I want the chat to be talking trade ideas, talking stocks. What are you doing today? How are you doing today? How are you feeling today? Right? We just came out of what was maybe one of the most eventful days of the year for the stock market yesterday. And tomorrow, don't forget, is options expiration. So there is a lot to discuss on the market front. We'll save all that for 10:20 when I bring Mitch on. But you can talk about that stuff in the chat. The chat is free reign. The chat is yours, right? I want the chat to be as active as possible. Second thing I want to say is every company that is on today's show has partnered with Benzinga to be here. That is why the stream is not monetized on YouTube. That is why there is a disclaimer on YouTube. This is one of the ways that Benzinga monetizes all of our video content, right? We do 8 or 9 hours a day live for free for you. This show is one of the ways that we monetize our efforts on the video front. So just so you know, every company that is here today has been paid to be here, but they don't know what we're going to ask. They don't know what I'm going to ask. They don't know what you're going to ask, right? So fair game on that front. If you want the schedule for today, the breakdown is in the description of this video. We're going to start off here with Sachem Capital in a couple of minutes. We're going to be talking real estate. We're going to be talking, actually, this one will be good because Sachem is really here to talk about just the entire sector. And that's, I think, a good framework for this show, right? My goal for this show is to have you and me also not just learn about like a specific company or whatever, but like ideally an industry, right? Get you thinking about, oh, okay, so like that's how this industry works. Or like I never thought about that space before, or I've never invested in that space before, right? So even if you're going to say, okay, I don't know if I'm down with like that company, I feel like maybe I want some more exposure to that industry, right? That's also my goal for this show, right? It's not just about the company, it's about the sandbox that they play in. Sachem Capital will give us some insights into their sandbox, which is real estate. So that'll be coming up here in about 4 minutes. Money Mitch, I see you in the chat. Money Mitch, you're coming on with me in 40 minutes, right? I think 40 minutes from now. Money Mitch, you're coming on. So don't give away all your ideas in the chat, Money Mitch, because 10:20, you're coming on with me. So be there or be square. What's up, Anthony? What's up, right name? Claude, born to be free. How you guys doing? Yeah, drop your exactly right. This is where we get the stories. This is where we get the stories. Of course, it's not all about story, but a lot of times it is about story, right? So drop your question in the chat about anything. Hey, while you're at it, hit that like button, please. The more likes, the better. It sounds so stupid. I hate saying it. I really do. I don't know if you can tell, but I really do hate asking for likes because it just makes me sound like some like schmuck on a stream, which I guess I am. But it really does help. It sounds dumb, but it really does help. For some reason, the YouTube algorithm loves videos that have more likes. So that thumbs up, it's right there. It takes 2 seconds out of your time. Hit the button. And that can be your way of paying us here, is just being the like. So I appreciate all the likes from everyone in the chat, and I hope we get a nice number today. If at any point you have an idea for a company that you want to see on this show, or frankly any of our shows, doesn't have to be this one, email us. Okay, I'm going to put our email up on the screen right now. shows@benzinga.com. If you have any requests, you can tweet at us. You can put it in the chat. But if you email shows at Benzinga, there is a much better chance that somebody will see it, because that email goes to a bunch of people here, not just me, right? So rather than like DM me on Twitter, which you could do, I would advise sending all ideas for guests to that email address, a company that you want to hear from, right? A CEO that you've been following for a while, whatever the case may be. We will do our very best to facilitate your request. That was weird. Did you guys see that? Okay. Moving right along here. All right. So I covered the likes. I covered the guests. See, Roy is a great example. Roy, I'm going to forget that you said that in like 5 minutes, right? Oh, wait. Is Beg a company? Is that a ticker, or are you just saying? Oh, never mind. I thought BEG was a ticker. That's how messed up my mind is, Roy. So forget I said that. Okay, so we're going to have Bill Haydon, who is the CIO of the Sachem Capital, on coming up here. Before I bring him on, though, I just want to do a quick thing. There was a link in the chat for ticker. Okay, it's ticker.com/Benzinga. CKER.com/Benzinga. Check that link out. Okay, Ticker is a company that is basically partnering. It's bringing together shareholders and like consumer perks, right? So, for example, if you own a share of Starbucks, you can get some Starbucks rewards for being a shareholder. Okay, if you create an account on Ticker and connect your brokerage to that account, so they know what you hold, and tell them you're from Benzinga. During the sign-up process, there's a little box you can say I'm from Benzinga. They will give you a $25 Amazon gift card. Okay? So check it out. The link is in the description. It's also on the screen. TIICKER.com/Benzinga. Check it out. Okay. Enough blabbering, Spencer. You're not really here for that. You're here for the companies. That's what I promised, and I will deliver for you. Our first one is coming up live right now. I mentioned his name. His name is Bill Haydon. He's the Chief Investment Officer of Sachem Capital, and he's here, and I'm bringing him on. Bill, welcome to All Access. How are we doing today?
Good. How are you?
Doing fantastic.
Good. Thanks for arranging.
Let's just start with this. Tell us about the firm, and then we'll get into your strategy and your thoughts on the space.
Sure. So Sachem Capital is a commercial mortgage REIT. We operate in the hard money space, non-bank, Alt-A. So for commercial investors that don't meet the bank box, where the loan cannot be accepted at a bank or in a pristine situation, we'll step in and offer that financing. So it's traditionally loans that are just, again, one step outside the box of the kind of the A credit box, and that's the space that we operate in.
Why?
Because of the demand. Really, the demand for that is so huge. Banks are incredibly conservative in this part of the cycle, and they don't really they're not able to get their arms around a lot of the projects that we see. So their timing is very long. Their time to close is fairly extensive. So we can act much more quickly and kind of get our arms around in a custom way the projects that the commercial investors bring to us.
All right, so maybe we should step back for a second. A lot of people, I'm making a broad assumption here, but I'm just going to say a lot of people may not have any exposure to real estate, right? Can sell us on that idea. Sell us on why real estate is an important sector. I guess sector. It is a sector. So why is it an important sector to have exposure to in your portfolio?
Well, I think REITs in general, as far as a sector, is an important asset class to have. As inflation goes up, and we're sort of seeing that now, real estate and real estate investments are a conduit of cash flow that will rise in line with inflation. So as rents go up and incomes and revenues rise, that cash flow will be returned to the borrower through the REIT structure, where there's an obligation to return 90% of the net profits back to the shareholder. So again, as the cash flow increases, the return to the shareholder will increase.
I think you kind of just said the key word there is inflation, right? This is an inflationary hedging asset.
It is. Yeah. REITs do really well. REITs do really well in inflationary. There's a balance. If inflation gets out of hand, then that becomes a little bit of a challenge to the real estate sector. But if it goes up in a measured way, it's a very good thing. It's very accretive to the future cash flow.
Okay, so let's talk about the structure of Sachem and your investing. We know the sandbox you play in, but your investing philosophy, your criteria, why you own what you own.
Sure. So we are, I would say, conservative. Even though we're in the space that we're in, we do operate in a conservative manner. So across the portfolio, our loan to value is 70% or less. So we want investors to come to the table with at least 30% down. If they're unable to do that, then we have lots of little tools and tricks that we can implement to increase the strength of the deal. And one of those is what's called cross-collateral. So if someone comes to us with a property and that they want to invest in, and that we want some more strength, or they want to possibly put down slightly less than 30%, then we will cross another property in the portfolio that they own. So we will get access or security on two properties to make that happen. Our benchmark rate is 12%. Right now, you can see that on the lower right. Our weighted coupon as of the close of the quarter is 11.9%. And then we also charge origination. The average duration of a project is about a year. The population of our investors come to us to basically pursue, the American dream, let's call it, improve their lot in life. They see a property that needs to be stabilized, improved, even constructed, totally new construction. And so then they step into that space and we help them accomplish that.
Do you have a geographic footprint, or you're all over?
We do. Yeah. We traditionally focused on Connecticut and the tri-state area. And now over the last year, we've expanded to all Eastern Seaboard states. So from Maine to Florida, we have a sales office in Austin, Texas. And we also have some opportunities coming together in Memphis, Tennessee. So we're sort of like pioneers, kind of going out west. We're going to take it slow and walk before we run. But right now we're in all Eastern Seaboard states.
Tri-state area represent.
Yeah.
Okay. So what can you tell us about, because real estate is so local, right? Or it's so regional in many ways. What can you tell us about that specific market right now that you're in?
In our geography of the tri-state area, the East Coast. Well, I mean, I think everywhere real estate has gone stratospheric. There are certain pockets that, interestingly enough, where it has not. For instance, the Texas market is still very, I think, undervalued, where new home sales are going for much less than the Northeast. So the cost to rebuild is probably going to push up that market quite nicely. But, you know, it's really everywhere. Connecticut is the same as Florida and the Boston market. Unless you really step away from the, you know, the more urban areas, you're going to see real estate has gone stratospheric. So everything is right now priced to perfection. So our underwriting has to be very discriminating to accommodate for that pricing.
Yeah. I'm curious, what have the last 2 years been like for you? Like from the business side?
It's been amazing. We've been growing quite a bit. I mean, I guess I liken it to, you know, a jet flying at 5,000 feet, but having the capability to fly at 30,000 feet. We've made changes over the last year that have brought us from 5,000 feet in altitude to, let's say, 22 to 25,000 feet in just the last couple of quarters. And we can accommodate that. So we're growing very nicely. We have taken on some new initiatives that have always been there to sort of take on, but we didn't want to do it until we were a fully operational lending business. And now we're sort of stepping into that. So now we can play with the big dogs.
I'm looking at the charts there, both in terms of your asset growth and your loan originations. And yeah, that's year-over-year growth is what that is.
Yeah.
So
one thing that I'll add that's interesting is because some people see the chart and they think that we're correlated to a stratospheric rise in value, and that's not really the case. Our growth is coming from stepping into markets that have always been there. You know, so we're accommodating, you know, flagged hotel lending, we're accommodating large multifamily lending, warehouses, strip malls, that kind of thing, where our roots were more sort of single family residential fix and flip going back, you know, 10 years ago.
Okay. How does a rising rate environment affect your portfolio, your business?
Well, operationally, we will do, I think, fairly well. And the reason is that our duration is so low. So we have about a 1 year duration in our portfolio. So rising rates are you know, the function of rates increasing is how long is your duration or how long is the commitment on the rate. Ours is so short that mechanically we won't have an issue. The issue is really embedded in the world sort of getting, I think, too used to low interest rates. You know,
you think?
Yeah. I put out a piece this morning that basically outlined very quickly, you know, the Fed raised rates at the end of the 90s, which led, you know, theoretically led to a recession. But if you fast forward from 2004 to 2006, the Fed raised rates 16 times, and it probably led to the recession. In 2018-19, they raised rates 7 times. Now with the level of debt, how many rate increases would it take to change the cycle? That's really the big thing that we would, that we're operating around, where most of our strategy is when does the cycle change and what does that mean for us? You know, so that's the big thing.
So you're saying that in spite of yesterday, the cycle has not changed?
No, I think that things will continue on. The Fed declared that they're going to raise rates. Now, remember, when they do that, the first rate increase is always met with, hey, the Fed's increasing rates, things must be good. They have to slow it down. Okay, so it's always met with this like, hey, things are good. The Fed has to slow it down. The second one, they're like, it's still pretty good. And then how many will it take before people say they've gone too far? Every rate increase cycle has been met with a recession. I can give you all the historic data to back that up and all the cycle changes. The recession that we just went through started in December of 19, 3 months before the pandemic. So that was, in my opinion, led by economic policy that embedded within that was a series of rate increases by the Fed that started in 2018. So I think the next cycle, if you're a REIT operator, is when does the cycle change? You have to really know what you're doing to run the business through that. So I believe we are prepared. We do have our arms around that.
The average term of 11 months, right? The average duration of 11 months or less than a year. Why is that? Is that purely a function of the rate environment, or is there another reason behind that?
Well, it's the behavior of the investor. They pursue projects that they want to either refinance out to stable credit, A box at lower interest rates, or flip the property. So they will do it as quickly as they can. It's basically entrepreneurial American dream, effort, right? So they buy a property and they want to get that wrapped up as quick as they can. Less complex properties take 5, 6, 7 months. More complex take 16, 17, 18 months. The weighting across the portfolio works out to be about a year-ish.
All right, there's questions in the chat. Chad, I see you, and we got someone in the chat that definitely works in the space. So Sadat, I see you as well. I'm gonna ask these questions right now, and then because there are a few of them, and I want to give time. So Sadat was asking about your recent unsecured debt raise, $45 million. He's asking what that will be focused on.
So it's to deploy capital into our lending opportunities. If you look at the history of our bond raises, our rates continue to collapse. We started in the mid to high 7s. We did a preferred issue that was in the high 7s. This round, if you think about sort of, I guess the proxy of confidence at the 6% coupon, that was huge. So it helps increase our margin, but we're going to put that back into opportunities at the weighted coupon of 11, 12%. So that's what we're doing. It's all securitized debt. So it's very compelling for us to continue to raise capital at these low interest rates.
And then to follow up on that, because commercial real estate, and I'm reading from Sadat here, is under pressure. He asks if you're focused on distressed.
It's really up to the operator and what they focus on. But normally it is, again, destabilized to stabilize. So some factor that needs improvement, strip mall that needs to be rehabbed. We did an 84 unit rental property in New York back in, we closed in May, and he's refinancing out now. He stabilized the entire property and it's fully rented. So it's projects like that. So it runs the gambit of, warehouse to multifamily to your typical single family fix and flip.
This is an interesting question, and not necessarily. Actually, no, it does pertain to you, seeing as how you're on the East Coast. Kevin is asking about real estate in low-lying coastal areas the next 20 or so years. Kevin, I wonder what's on your mind there when you ask that question. So, what are your thoughts? Granted, this doesn't necessarily apply because we just talked about having short-term holding periods, but you are on the East Coast. You're in the tri-state area. What are your thoughts?
There's a lot to that. There's a lot to it because there's different functions. So, waterfront luxury properties have done very well because of the wealth effect. So your typical investor that might have $10 million a year ago now has, 15 million, right? So 5 million has appeared out of thin air. They're totally fine throwing that down on a luxury property on the water. For the long-term holders, we do see certain pockets where we're seeing sales out of the areas. So there is sort of these counter forces where flood insurance is going up, taxes are going up, the affordability is a little bit odd. But then you also have the wealth effect that's sort of overwhelming that, where people are saying, hey, no problem. You want to sell your house on the water in Miami that probably will be, a little bit more at risk for flooding. Yeah. I'll take that because $5 million just appeared out of thin air in my trading account. so they'll do it. So there's a sort of counter forces, I think, and we can't know. It's naive for me to think that I can predict any weather cycles. So we can't know that. I think there will be plenty of ways to accommodate for the flooding, seawalls, and different things.
Weren't people buying property on the Nevada-California border like 20 years ago, waiting for California to just fall off the
probably
list? That hasn't happened yet. So maybe when it does, I'll be wrong.
Right. Probably. Yeah. There's a lot of, I guess there's always small pockets of odd behavior, but I think for the most part, the wealth effect supports certain cycles. When that changes, that cycle will deteriorate a little bit. Waterfront, there will be ways to mitigate flooding and that sort of thing.
RM is asking a really good question here. He's asking for your mix of residential versus commercial. I don't think we've discussed that yet.
Yeah, so it right now it's probably about 60% residential, and about 40% commercial. And the weighting in residential has to do with anything where people live. So an 84 unit rental property would normally be considered commercial. We see that as residential. That weighting, I would say 60, 65 residential, 30, 35%.
Is that normal for you?
We are developing a little bit more into the commercial. So the weighting is moving a little bit more into the commercial area. And the interesting thing about that is within that is there's an embed hedge because a lot of commercial operators take out a slide rule and a calculator and think about the value before they do it. Residential owner-occupied buyers do that a little bit less. So when you get into a bidding war and they say you must overpay, you must pay the premium, you see in cycles like the real estate bubble and various things, homeowners will say, no problem, I'll pay $100,000 more for that. Commercial operators won't do that. So embedded in the relationship with them is their own calculations for cap rates and things like that. So we don't see the commercial space as overheated, or we don't see the values having risen stratospherically as we do residential. So it's kind of a hedge to diversify into that space.
I would be curious to just get your overall thoughts, Bill, on both sides of the real estate market. And we'll start with residential. Obviously it's in the headlines every day. I got a push notification last night from the WSJ while I was driving about all the homes millennials are buying. We'll start with residential and then we'll go to commercial. Like, what are your overall thoughts on the space right now? Obviously it's pretty heated, it's pretty hot. Is it too hot, or is this fair?
So I would say that it is a little overheated, and it is really supported by a couple of forces. One will change, others won't. One force is low interest rates. That's going to change, right? So people think about the affordability and they go, hey, a month ago I could buy this. My payment was $2,500. Now it's $2,700. I'm going to behave a little bit differently. The forces that are within that, though, are new household creation. Also the pandemic having people retreat home and then coming back out again. People changing the entire culture or demographic of where they live because they can work remotely now. So there's a lot of shifting sort of dynamics in the space, but I see household creation as positive. It will continue. Every day more humans are coming online at every birth center in every hospital across the country, right? They need places to stay out of the rain. So it's going to continue. It's just, I think, really the big things to think about interest rates. That's the biggest thing, because it's going to change people's behavior around affordability. In this cycle, you don't have multiple homeowners, though. Whereas in the last one, if you ever saw The Big Short, that movie, which is, epic.
Many times.
Everyone had, 10 homes or 19 homes or whatever. Now we don't see that. We're not seeing our speculators doing that. They're much more sort of judicious about how much real estate they're consuming.
On the commercial side?
It's the same thing. Yeah, it's the same thing. They're much more judicious. I think they're even more judicious, again, because they see a property they like. They go home and they do a cap rate analysis on the property and they go, this doesn't work, right? Your typical homeowner would say, my wife wants to live there. I really have no choice but to overpay. So commercial operators usually don't do that. They don't move ahead like that. Yeah. So it's less bid up.
Bill Haydon, the CIO of Sachem Capital. Bill, any just final thoughts for us on your strategy for the next year or the space or whatever?
Yeah, I would just say that we're excited about our growth. We're firing on all cylinders. The bigger we get, the more diligence we do, the more we learn about the space and create joint ventures. So we're very excited about our runway to expand. Very excited. And what I would say is, I could share things with you. I would sign up for investor alerts. That's the best way to get it, because in the moment that I could share something with you, you would have gotten an email to see what we're doing. But we're very excited about the future. All right.
Bill Haydon, Chief Investment Officer of Sachem Capital. Bill, a pleasure to chat with you. Have a great rest of your day. Happy holidays. Happy New Year.
You too. Thanks again.
All right. Let's move this right along. Before I bring in our next guest, I just want to do a quick check on our like situation. How are we doing? 91. Can we get 200 likes in the next minute? That'd be sweet if we can get 200 likes. All right, let's move right along here. We got to keep this train running on time. We're going to bring on my next guest. Ilan Hadar is the CEO of PainReform. We're pivoting here, right? We're going to pivot from real estate to healthcare, right? Pretty jarring, but hey, we got to cover the gamut. We can't just focus on one sector the entire day. I suppose we could. Maybe we will one day. Actually, going forward, I think, I don't know this, but I think we will have themed all access shows, whether it's international or ETFs or even just like even real estate or whatever. Or I think we will have themes going forward. That was some feedback that we got, and we're working towards that for next year. But let's bring on Ilan Hadar right now, the CEO of PainReform. Mr. Hadar, how are we doing today?
I'm doing great, Spencer. Nice to meet you and great to be here. How are you today?
I'm doing fantastic. I feel like it should be Friday. It's not, but it's Friday in my head, and that's all that matters. So we'll start with this. PainReform, tell us what you do, and then we'll go from there.
PainReform is an Israeli company founded back in 2008. We are doing post-operative pain management drug right now. We are working on our leading candidate to become post-operative pain management. That's a PRF 110. It's a drug that's supposed to give relief of pain up to 72 hours post-operation.
All right. What is the unmet need here? Obviously, there are many operations, and there is if there's an operation, there's a need for post-op pain meds. But what is the market size that we're talking about, and how do you see it changing?
So the issue is the unmet need is the opioids. It's the opioids dependency.
Okay.
That many patients use opioids post-operation, and many get hooked to those opioids. And I've been in a conference back in Miami, and the analyst that presented the company had a knee operation, and he came up and said that after having that operation, he couldn't get off the opioids. And he's looking for a company like us that will bring a solution that will bring pain relief without the need to use such medications. The market is huge. It's over $12 billion today in the US and growing. Only 2 companies today in the market, and we hope to become the third to compete with those 2 great companies out there. But we are developing a product that we think will be better.
So what exactly is your product? It's not an opioid, right? And it's not an NSAID either. So what is it?
It's an oil-based product that has ripovicaine in it. That's the medication that we are using. It will be instilled in the incision, and it will be slow release post-operation. It will be instilled. It will be closed over the incision. Will be closed over it post-operation, and it will release the drug into the wound, giving the pain relief. That's how it will work. And as I mentioned, only 2 companies out there right now producing or offering such solutions.
So where are we in the regulatory cycle here?
So the company did the phase 2 in Israel 5-6 years ago. Okay. After that, the company approached the FDA back in 2018, and the FDA gave the green light to initiate 2 phase 3 trials in soft and hard tissues in the US, of course. Right now, we are working on manufacturing the clinical batches required for those trials, and when we will done, we will initiate the trials in the US.
Okay, so we don't have, so phase 1 would be the next step, right?
Phase 3. That will be phase 3.
I'm sorry. Yeah, phase 3. Okay.
Phase 3.
Okay. Before I move on down this road more, are there other candidates in your pipeline?
We are working on other pipeline products. It's a bit too early to announce regarding those products, but I hope that during 2022 we'll be able to announce that we have other drugs coming following PRF 110.
Okay. Well, and what more can you say about the timeline as far as expectations for decisions? The start of that study. Are we talking like first half of next year and next half of next year?
So as we announced, we moved the manufacturing from Israel to the US. We had some issues with our CMO in Israel following the COVID and some HR matters they had. So we had to move the production of the drug from Israel to the US. We chose a company in Maryland that it's a great company right now, and it's really great working with them. That's Pharmaceutics International Inc. They are located in Maryland, and we are working with them now, doing the scale-up work and manufacturing the drug. I hope that during the first half of 2022, we will be able to manufacture the drug with them, and then initiate the trial by, I would say, around mid-2022, initiate the trial when we will announce that we successfully manufactured the drug.
What I guess my question is why this, right? Obviously, in the U.S., opioids is a massive issue. It really, it's an epidemic, and is, we all know this now. It's been an epidemic for quite some time. But like, why is PainReform going after that as opposed to all the other things you can do?
The technology that was developed by PainReform, the slow release of the drug, it's really suitable for giving relief, a pain relief in such condition, in such operations. And that's why the company thought that when the company was founded, there were no drugs out there giving relief, and there were only the opioids for really hard pain. So the company came with the idea, let's use the technology that we have to do slow release of the drug into the incision, and that will give the relief. And we are still there. As I mentioned, 2 companies came in the meantime, but we believe that we have a better product, and that's our offering. That's what we do. That's what we specialize at, and we think that we have a drug that has space and can bring revenue and return to the shareholders.
Without getting too technical, can you explain, Ilan, a little bit about that slow release and how that works?
Sure. So it's an
please explain like I'm 5.
Absolutely.
Okay.
So it's an oil-based product, quite viscous. So during the operation, the physician will take the drug and will instill it in the incision, and will close the incision over the drug. And while doing that, the oil-based solution will start releasing the active pharmaceutical ingredient into the wound, giving pain relief. We did the formulation of the drug in such a way that it will really hold for many hours, giving relief, and not releasing the drug at once. And that's what we believe our great selling point, that it can really work up to 72 hours.
Okay, wait. So follow up on that ending there. So up to 72 hours, meaning what?
3 days post the operation. Hopefully, you would not have to take any other pain relief drugs.
Okay. Would that theoretically be part of the study? Has that been studied, or combining this with other drugs?
The target is that it will be only used for pain relief. You will not have to use other drugs.
Okay. All right.
And during the second phase, during the second trial we did, it was effective, giving relief to those patients. And that's also what we are going to check in our phase 3 study, only to give PRF 110, and to see that those patients will not need to use any other pain relief medication.
And what about other demographics of patients, as far as age or types of surgery? Does that matter? Does it not matter? Is it really just any post-surgical pain situation? Any age?
So in the past, the FDA granted what we call the general pain indication. So when you had such a drug, you can use it in any kind of operation. And nowadays, the FDA grants permission to use it in special indications. So we are going to, in the initial trial, we will go to the heart tissue. We will do a bunionectomy study. That's something that you do in the foot. Trying it in a bunionectomy study, see that it works. And following that, the plan is to do a soft tissue that will be hernia, and see how it works there. When we have those two indications, we will have to discuss with the FDA and see where the FDA will grant us the permission to use it in what indications.
Got it. So, if we can skip past the trial for a second, and then let's just pretend that doesn't exist for a moment. Obviously, the next step after that is the commercial, assuming you meet the primary endpoint, secondary endpoint, all that stuff, and get approval. The next step at the end of the day is commercialization. Can you speak a little bit about that and your plan there?
Absolutely. So after we will conduct the two necessary trials per the FDA guidance, we will submit what we call the marketing applications, the NDA, and if the drug will be approved by the FDA, we will launch the drug. I would say that as an Israeli company, it's not easy to launch drugs, a small Israeli company. It's not easy to launch drugs in the US, although it's something that I already did in my past position with Forex Pharmaceuticals. There we launched two drugs in the US market. But as a small Israeli company, I think the best path will be to hook up with a strategic partner in the space that knows and is a substantial player in the US pain or drug space, and let them market the drug.
And speaking of that background, Ilan, you've spent, I guess, the last decade or so or maybe more in the pharmaceutical space. You've been at different companies through the years in various roles. You've been the CFO, you've been on board. You're of course now the CEO. Can you talk about some of the past successes that you've had there?
Sure. So I until around 2011, I was in the high-tech industry. I was working for HP, Hewlett Packard. Right. And then I was approached by Pfizer, and I learned that the pharmaceutical space is a great industry, and I moved and worked for Pfizer. Pfizer was a great school, I must say, a great company to work for. When the opportunity came to take Forex public and to become the CFO of Forex, I jumped and I took the position, and it was a great ride for the last 7 years, working with a great team over there, and we developed drugs for the dermatology space, went through phase 2, phase 3, the NDA application, until we launched the first drug back in December 2019, and then another drug came. So I'm bringing the knowledge. I also have a great team here that joined me. I have Dr. Ehud Geller and Professor Eli Chazum, both from the Medica Fund. They held really senior positions in the pharmaceutical space in Israel. And I have the rest of the team here. I have my CMC specialist, Rita, and my clinical specialist, Sigal. Great experienced team here at PainReform, developing the drug. So with the combined experience that we have, I think we have everything we need to push and develop another drug that can come commercially available.
You mentioned Israel. Why exactly is the biotech/pharma space so big in Israel?
First of all, I think because of education, really in Israel, you can really get great scientific education. We really have great institutes here and that provide such education. And also with really the connection between Israel and the US and the availability of funds that we do have from the US coming to Israel as PainReform. PainReform is publicly traded at NASDAQ. So we have the human resources we have the financial resources we have the infrastructure here in Israel. So everything combined can really give you great space for developing great pharmaceutical companies.
Yeah, it's interesting because I also come from an area like I come from New Jersey where there's a lot of pharmaceuticals in New Jersey. Johnson and Johnson is in New Jersey, Pfizer is in New Jersey, right? All the Merck is in New Jersey. They're all in New Jersey, and it's interesting to hear how the industry just sort of gravitates towards certain areas, right?
Yeah,
So
absolutely. Forex now Vine also was in New Jersey, so I know the area very well. I can recommend great restaurants over there that I visited. Yes, and right now you cannot see it, but behind me, it's the financial district of Tel Aviv. And really, if you look at during the day, you can see really the high rises. It's really like New York. So it's great to be in Israel. Great to working in the pharmaceutical industry. And I really believe that PainReform can become a great thing, and that's why I joined a year ago.
Yeah. Well, since you mentioned Fomex, I mean, you have experience with not just going public, but M&A in the space.
Yeah.
Is that something that would be on the table one day?
Absolutely. I think it's the natural growth for PainReform will be to merge with a company that is coming from the space and can bring the marketing and access capabilities that we will be looking for. And I hope that when we come with a great phase 3 clinical trial and great results, companies will come and pursue us. That's something, of course, that if it happens, we will discuss and see where it goes.
Yeah, always an interesting thing to, I asked that question knowing that you can't really answer it, but always interesting to ask it nonetheless. All right, Ilan Hadar, the CEO of PainReform. Ilan, just as we wrap up here, do you have any final thoughts about your technology, about what it can do or not, and just what we should know about it?
PainReform has a great team. I believe in the technology. We will continue putting our resources and time into developing the drug, and I hope that during 2022, towards mid 2022, we can come with results that we are moving forward, enter the clinical trial, and by end of 2022, going into 2023, I hope that we can bring good news to the market that we had a successful trial.
Did you say anything about the size and scope of that trial?
Yes, it will be 400 patients. It will be conducted in the US. We already chosen the CRO. It's Lotus from California, a great CRO that they have the capabilities that we are looking for. And we are looking forward working with them and initiating the trial.
And I apologize also. Did you also already say when that initiation could start?
I'm looking to initiate it by mid of 2022.
Middle of the year. Okay.
Yeah.
All right. So that would be our next check mark, basically, right? Next thing on the list would be
absolutely.
that. Yep.
Absolutely. We will announce that we produced the GMP batches and moving into the trial. That will be the next milestone.
Awesome. All right, Ilan Hadar, the CEO of PainReform. I know it's getting kind of late where you are, Ilan. So I appreciate you taking time out of your evening, and have a great rest of your day. Happy New Year, happy holidays, and thanks for coming on All Access today.
Thank you, Spencer. Happy holidays and happy New Year.
All right. There's a great conversation happening in the chat that I definitely want to address. I see you guys talking. So I think was it John Thompson? John Thompson, are you related to the basketball coach, John Thompson? Had a great point, and I definitely want to address his comment, but I want to find the original comment. So let me scroll up for a second here. Yeah. So okay, that was I think that was the first comment, John. And there's a whole thread about this in the chat. If you're watching along, it's a great point. Obviously, I cannot speak for other companies. I don't work for other companies. I don't know what they're doing. But the way that Benzinga and the media at large makes money is advertising, right? Advertising can mean many things, right? It can mean sponsorship, product placement, whatever. Obviously, Benzinga does not and cannot be promoting stocks. That is not what we do. And when I say promoting, I mean like paid promotion. And that is specifically not what this show is. This show is not stock promotion. Frankly, you know, I said that up front, right? We're not going to talk about the stock. We don't talk about the stock on this show. We don't. But what this is a form of advertising. We are transparent about that. We are upfront about that. We always have been. I always have been. I've always tried to be as transparent as like humanly possible, right? It's the disclaimer is put on YouTube. YouTube knows it. You know it. The companies knows it. I think that's kind of the best way to go about it, right? Is to be transparent. If you're not transparent, then like that's shitty, frankly, right? I mean, that just sucks. So yes, we do get paid by all sorts of companies. Advertising is how we make money. This can't be a charity. And John, I don't think what you're saying is wrong. I think what you're saying is in the chat is very valuable. But like, you know, we have to keep the lights on somehow. So yeah, the solution is advertising, and the solution to that even is being transparent about when we're being paid for something. That is why this show is more about story. Obviously, for the companies, yes, they want to get in front of investors, right? I can't speak to their motives specifically because I don't know their motives. But if I were a public company, or I would want to get my name in front of investors, that is certainly a motive there, right? And that's what we can provide, right? We're not saying, hey, everyone go out and buy this stock right now. You don't have to do that. If you don't want to do that, we're not going to make you do it, right? We're not recommending it in any way, right? We don't do recommendations on this show. Other companies do that, right? Recommendations. That's not what this is. We're not recommending anything, frankly. And this has been the subject of many internal conversations, John. Just so you know that like your point is very well received, and we are as careful and diligent as we can about being transparent, because it's very important to me and us, all of us. But I can only speak for myself, and it's very important to me. Transparency is key. Okay, that being said, I see Money Mitch and his fresh haircut lurking in the background. We're going to take a quick break from the interviews, do some market talk. I'm blind as a bat right now. I have no idea what is up, what is down. Are we at all-time highs, or are we in a depression right now? Who even knows? Mitch probably knows. He's got the Santa hat. Ho, ho, ho. Santa, how we doing?
Santa rally, anybody?
Where are we right now? Help me out here. Where are we?
All right. So the market, let's take a look at the overall market. Overall market came back towards this really important price point, which is 470, right? I mean, if we look at the daily charts, you're going to see resistance all through that. That's what we got through on the pre-market, where we're looking to see if it was going to hold on pullbacks. We're starting to see a little bit of a hold there. So that's an interesting move there. It's starting to get to 1030. So we're going to look for a reversal above VWAP, above 472, showing us it's a strength coming back in. Let's take a look at the Qs. Similar chart, right?
Same thing.
Literally same things, right? Finding a bottom there, trying to get back above 400 for the Qs. That's the level that I'd be watching for the Qs. If we get it back above 400, you could probably take out that 403 today. We'll see. We're going to be watching this. Let's take a look at the sectors, right? What was hot? What was not?
What's up? What's not?
So communication services, I got a whole bunch that I can go through. So I'm going to try to go through fast, but I'm just going to call out the movers of the day here. Verizon having a good day, 2.2%. But really the leader in that communication services today is AT&T having a great day. If you look here, I'll put the 15-minute up. You can see here how it's been trending up there by the 2350s. We'll see if this continues to run. Also, you got T-Mobile having a good day. So it looks like a little bit of a Santa Claus rally in those names, right, Spencer?
Yeah, I just want to be, clarify the term Santa Claus rally. This is me being like super pedantic here. Historically speaking, there does tend to be a rally in the overall stock market the last week of the year, right? That's typically what the Santa Claus rally is referring to, right? It's not referring to this week. It's not even referring to next week, the week of Christmas. It's referring to the week after, the last week of the year, in between Christmas and New Year's. Everyone's in a great mood. If you're not on vacation, you feel like you're on vacation because no one is working, right? I mean, it's like the slowest week of the year for everybody, or most of us at least. So,
hey, we'll see.
So that's what it refers to. It refers to the general phenomenon of stocks moving higher the last week of the year. If stocks were to go down, if stocks were to go straight down every single day from now until December 27th, and then we would still be eligible for a Santa Claus rally. As long as stocks go up that week, it would still technically follow the historical trend.
Yeah, 100%.
Everyone asking, is Santa Claus rally now? Obviously,
did Santa come early? That's what they're asking.
Did he come early? That's the question.
That's the question.
That's the question you're asking. And the assumption or the presumption there is like, are we going to go straight up from now through the end of the year, the next 2 weeks and change, basically, the final 2.5 weeks of the year? I would have a very hard time seeing us going straight up across the board the rest of the year, as we've already seen this morning, right? In the overall market, as Mitch showed us the Qs and the SPY, we already pulled back a little bit off of yesterday's highs. It won't all be that easy like it was yesterday from 2 o'clock to the close. All
right, I got a lot more to go through.
I'm sorry. Go ahead. Keep going.
All right, so let's talk a little energy. Energy has been strong lately. If you look, it's starting to find a bottom here on my index, starting to come on up towards this trend line. We're going to see if energy starts really trending into the beginning of the year. Stocks that I've been giving out in energy, we could take a look at some of you could look at some of the oil names really holding support there, Marathon Oil. And if you wanted to kind of use a little bit of leverage to see how we're looking, Gush looking like it wants to come back there. So oil not looking too bad. Let's go to basic materials, where I did see a strong industries here, Spencer. Silver up 7%. You don't see that often, an industry move at over 7% there. Silver names I'll give out, PAAS having a good day, up 8%. You can look at AG having a great day also. And then SVM. Those are the ones that I'd tell you to look at in silver. I'm going to keep trying to fly through here. Aluminum having a great day. Alcoa, 6% move up. ACH also a 6% move up. Alcoa is the one I would definitely pay attention to in aluminum. You can see it really strong from this 50 price point and really pushing on up. Could come back out to take out that high that you see on October 18th. We'll see what happens on that one. Let's keep going down. You could look at some steel plays also having a great day today.
Yeah, show us this, because steel was down yesterday, right, didn't it? Because Nucor lowered guidance.
Fake out, man.
Oh,
look at new
reversal.
Look at new today. Strong day for new.
Oh, buy the dip works again.
Cliff. I also want to call this one out. I like the hold of 20 there. We can see it maybe get back towards 23. And then another one, of course, U.S. Steel, right? I mean, we're going to take a look there. Catching a bid there at 23s. If 23s hold now, I could see this one coming back towards the trend line here and trying to take out that highs. We'll see what happens in U.S. Steel. Of course, high inflationary environment. We kind of expect basic materials to continue going up. I think we even got some Fed support. They said that inflation could be persistent into next year. I think this also could have maybe helped this trade. But let's keep moving. There's still so much going on right now, guys. Utilities.
I know the chat's got questions. I see your tickers.
Yeah, I got you guys. I got you. I just got so much. I did some research for it.
Okay, keep going.
Duke here, having a great day. If you're looking at utilities, this is one that I gave out on Monday on Money Mitch, looking for the push into the circle. Now we're in here. Let's see if we get a lift through 105. What I wanted to see was an increase of volume. I was talking about how we were decreasing volume. That's what we got to on the last day, yesterday. Nice little spike of volume above 20 million. Let's see if we get that same close closer towards that 20 million mark today on Duke. POR is another one I gave out on Monday Mitch, looking for this ascending triangle to kind of break out above this 51. Looking good today. And this is POR, Portland General Electric. These are all in regulated electric utility. Let's keep going. I got a little bit more to go through here. Healthcare, drug manufacturers. Man, they've been strong. Look at this. My index never shows stocks like that on a weekly. So right here, you're looking at strong stocks like Johnson & Johnson. Look at this on the weekly. Big push out. PFE on the weekly, LLY, all these kind of drug manufacturers having an awesome time. Today on pre-market prep, we looked at Merck. Was that going to catch a bid even? Merck has been coming off the bottom here, having a decent day of about 2%. Another one that I said to watch out for that was coming very similar to Merck was AZN, and they're both having good days. So you can see here laggard plays in these kind of plays, and you're seeing the leaders like J&J, PFE, LLY, and you could even look at maybe even BMY as one of those leaders because it's really been pushing back. We'll see what happens in these drug manufacturing names.
Wait, real fast, and thank you for the reminder in chat, Simple Guy. So we were supposed to have Relly on the show today, but Relly had to cancel last minute. We apologize. So we're working on rescheduling. Simple Guy, I don't know why. I'm sorry. I only work here. Okay, Mitch, what else we got?
All right, last area that I want to get into is financials because if you know, of course, interest rates are looking at getting potentially maybe 3 rate hikes next year. So definitely I'm seeing a little bit of a bid come in here in Goldman Sachs. This is the one that I called out in pre-market to look for in financials. Not a bad day. We'll see if it gets back above 400. That's an important price point. We came back towards 381. Bounced up there. Have made a good push on up. We'll see if this one can get through 400 today. Goldman Sachs. The next one I take a look at, Bank of America, having a good day today, jumping on up there. So definitely keep your eyes on some of these kind of bank names. And for that being mentioned, I wanted to take a look at Square to see if some of these payment stocks are finding some kind of bottoming action. But really, I mean, at least Square is showing us that there's no really a kind of rhyme to these just yet. So just be careful with those like Visa, MasterCard. They're really MasterCard maybe showing a little bit more of a bullish move, pushing through 350 if it gets through. But right now, I don't see too much positive, at least in those payment stocks. So it's a little bit all over the place. And it's kind of funny, but technology is actually down from the open about almost 0.5%. Some people might think this is kind of like a pullback, measured pullback here. So we'll see what happens at the end of the day, Spencer.
Okay. Andres Ramirez asked, can you please look at the IWM? Yes, Andres.
Yeah, of course. IWM.
Can you zoom out on that, please, a little bit, Mitch?
Daily here, zooming out here.
That's fine. Well, all right, not that far. I just like we were all watching. This is perfect. So we were all watching. I assume we were all watching. I know I was watching the IWM breakout, the one that happened. Where is that? That was the one that's like right before that high that moved there. So was that September? I can't really tell on the chart there.
On this breakout?
Yeah. Like okay, that breakout.
Yeah, this was through November period through high of November 5th.
I mean, I'm gonna get my own charts up so I can actually know what I'm talking about and not just look at this. So okay, IWM. So like that breakout, right, early November, right? We all saw that resistance up at the 230 level, so thereabouts, and it broke out, and then turns out it was a fake out, not a breakout. I will have IWM on like top of mind going into the new year. If IWM starts to really go, then like hold on to your hats, right? Because I think we're going, like we are going. We're going to start moving. If IWM can catch a bid, that will be my indicator for like broad-based sentiment. IWM goes up. I could not be any more bullish if IWM goes up. Like bullish everything, I mean. Or maybe not necessarily big tech, but like bullish everything else besides big tech, right? So watching IWM as my general market indicator, it goes up, I'm bullish. It goes down, I'm not.
All right, guys. So I'll try to use indicators here to paint us a little bit of a story. So for IWM, right, we had this when it broke out, it actually went towards this 79 price point, right, on the RSI, which is very important. You saw it kind of come up towards high trends, right? And so one thing I always talk about RSI is I personally don't trade off of it, but I use it to tell me stories, right? And so high extreme price points overbought here. And you can see when it gets to about 80, a lot of the times it reverses. So that's kind of the extreme price point on the upside. When you're up there, you want to see it continue to trend above that line, not get a really quick knockdown. Now the same thing's happening here off the bottom, right? We got to an extreme. Really, if you look back, you usually don't break 20s. You've had a couple of extreme moments here on really down times that the IWM has come down, but a lot of the times when it breaks 20, eventually it reverses back to the upside, right? And so now that we're back above that 21 on the daily, I'd be watching that. I'd also start watching some other kind of indicators to confirm maybe a push back. So you see how the money flow also went towards the top here when it was pushing on up. But if you see here, it kind of came back down, and now we're starting to find that bounce here. We want to see this really confirm also the RSI pushing on up like you're seeing right here and get that continued momentum towards the upside move. We'll see if we get that move and can get the money flow indicator, money flow showing bullet long-term kind of volume coming in here. We'll see if it can get back on up there towards the 70. That would give the bullish look on IWM, and I'll be watching this, guys.
All right, we got a couple more minutes with Mitch, then we're going to move on to our next segment here. So if you have your tickers,
I'll tell you what, drop some tickers. I'll tell you guys about a trade. I'm still in INTC here. Intel, I'm actually long here. I've been long since the bell. Been pretty much taking a VWAP bounce trade here. So we got up there towards 51.23s, started getting in, sizing in here at the VWAP. I sold a little bit at 51.25, and then now I've just been kind of holding towards 51s on downside action. We're going to look to see if we can get back above there. My average is 51.01. We'll look for this to kind of get back through the 51.36. I'm actually looking to sell some into 51.50. We'll see if we get that breakout. Look on INTC. All right, let's do some stocks from the chat. Just throw me the tickers, Spencer, and I'll just definitely try to roll through them really quickly.
All right, QS Ashton, you're asking the wrong guy. You should ask Aaron Bree. He loves QS.
QS? I love QS too.
You do?
No problem.
Okay. I have no opinion on QS.
I like it.
Okay.
You can see my levels here, right? So I have fibs drawn on this. Was looking for the 61 to hold here, and we kind of held there for a second, and then we broke back down all the way towards the support. So I think as long as you're using that longer term support here around 2260, you're okay to like kind of start looking at these plays. With QuantumScape, I'd also put in charge point also near the support there, right near that support. We'll see if those kind of hold. They're all going to kind of trade similarly here. Also, you can take a look to see if Microvast catches a bid, another battery stock, but definitely you got to look for them to hold their support. Like let's say in DM's case, when it popped up here, it came back to support, but what did it do? It cracked it. So just be careful that this happens, that this doesn't happen on QS.
Good point. Okay, a couple more here. Let's find some ones. All right, yeah. Let's do JB Hunt. Let's do JBHT.
JBHT.
Yeah,
let's do JBHT. Let's take a look.
Take a look. See. Hey, that chart looks pretty good, actually.
Yeah.
Wow.
Really good sideways consolidation there.
Nice.
If you even look on the weekly, you can really see the support there and resistance that you're trying to get above and hold. You keep wicking up here. So look for that to kind of get above that $200 point and really like kind of close at 200, right? Every time you're getting up here towards 200, you kind of don't get any closes. Wicks, wick, 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 wick. Let's get a close up there. If we get a close up there, it'll be looking strong to continue holding that as new support that was prior resistance.
All right, we got time for one more quick. We'll do Lucid because they don't report earnings tonight. That's Rivian, but let's do Lucid real fast. Master of Stonks.
Let's do it. 40 is the price point that I said today. Watch for it because yesterday you tried to cut through 40 multiple times, which was a big price point, and then you recovered that price point. So it's a big important price point. It was this red line here. Now you're seeing it kind of hold up here. It's okay as long as when you retrace, if you retrace to 40, you hold that. I'm still in a bullish sense actually now with that recovery of 40. As long as that 40 is holding, I'm going to be looking to see if Lucid can get back on up here. And if you look at the fib retracement and actually holding pretty well there near the 50%, we'll see if Lucid can get another push on up. For that being mentioned, I wanted to see if Ford would do well today, and it looked like we pushed through that 2050. This is one that I gave in pre-market look. Was looking for the push through the 2050s. Now it's holding that on pullbacks. I know a lot of people are watching Ford. And if you look at this sideways consolidation, we had that breakout here. Now you just want to make sure that you hold kind of these pullbacks. As long as it can hold 2050 now, I think you can go out and probably take out the 22. But like always, guys, not investment advice, just trying to see what I can see.
Just one man's opinion. All right, Money Mitch. Great job. We'll catch you later. Hey, if we missed your ticker, I'm sorry. But we will cover it. We will cover it hopefully on Benzinga Live or at the close or any of our shows later on today.
Hey, definitely, guys. Good to at the close. If you guys want to talk at the end of the day, that's what we talk. At the end of the trading day, we take a look at what happened. So check that out.
All right. Smash the like from Money Mitch. Mitch, I'll catch you later. All right. And he's out. He dipped. He's done. Okay, let's move on here. I got my next guest lurking backstage. I'm going to bring him on right now, actually. Arjan Haverhals, the president of Milestone Scientific. But before I bring Arjan on, let's just play a quick video. We'll learn about this company.
Milestone Scientific is a research and development company, patenting and designing in the field of computer-controlled injection technology. The current standard of injection technology is dated from the 1860s. Our vision of our company is taking drug delivery from the 1900s to the 21st century. Our devices are using dynamic pressure sensing technology, which makes it possible to control the flow during injections and also measuring any pressure changes at the tip of the needle. That allows us then to make injection safe, precise, and highly effective and virtually painless. Our dental solution is the STA, single tooth anesthesia system. It is an injection technology that applies for all dental injections for local anesthetics. And then the main benefit is for the patient, no discomfort, no lip numbness, virtually painless. And for the dentist, a unique opportunity to differentiate his practice, as well as driving and growing his business.
Our goal with any type of dental procedure is to have the patient come in, be comfortable in the chair, have anesthesia, enjoy the procedure, and leave here feeling very comfortable that they had great service and that this is something that they would refer their friends to. The STA single tooth anesthesia system is in every one of our operatories. I believe in it. My patients believe in it. It has become part of the nature of our practice.
In the medical field, we apply the same dynamic pressure sensing technology under the name of the CompuFlow epidural system. 40% of the women after labor and delivery remain in pain. And the only choice that the clinician is having is injecting a bolus, waiting for 40 minutes, and then having an answer, whether the catheter is in place or not. With our technology, within 1 to 2 minutes, we have the proof that the catheter is in place or out of place.
I've been using CompuFlow for over 4 years. It's helped me immensely. Not only does it make it easy for me, it makes it much easier for the patient, and there's less complications and less problems while using the device.
By introducing CompuFlow in the medical segment, there are 3 cost reductions that we can provide with our technology. One is reducing the morbidity rate. Secondly, shortening the education time of a resident on his way to become an anesthesiologist. And thirdly, to avoid the cost of litigations, which is on an average about $300,000 per case in the United States. We are very proud of having access to the technology, but more importantly, to share that with patients and dental professionals and medical professionals. It really underlines what is important for us, that is taking drug deliveries from the 1900s to the 21st century. And now it's time to go further.
All right. Arjan Haverhals, the president of Milestone. Arjan, thanks for joining us today. How you doing?
I'm doing well. Thank you for having me, Spencer.
All right. Fortunately, I don't have a lot of experience with needles in my mouth. But for those who have, I assume it stings. Okay. explain to us. So, I mean, that video did a pretty good job of explaining, what the technology, what the system is. But can you go into a little bit more detail about that?
Yes, absolutely. So it's called the dynamic pressure sensing technology. And what it does is during these injections, we control the flow rate by measuring the pressure at the tip of the needle, any pressure changes at the tip of the needle. So we have applied that technology in the dental business. If people go to the dentist, they normally see a handheld injection. It's a one-time shot. There's pain, there's necrosis of the tissue. And then when the dentist is giving that injection, he probably will say, don't worry, I will step out. And then if you're not numb, I will come back and you get a second shot. And that's definitely not something that a patient would like to hear. So what our technology is doing is, like I said, we control the flow rate. It's at a drip infusion speed of the injection, an immediate anesthetic effect in about as little as 60 seconds, increasing the efficiencies for the dentist as well. But that, like we said, it makes it possible to inject any drug below the patient pain threshold. So that's the reason why the injections are effective, comfortable, and virtually painless.
There are a lot of points on the screen right now that I want to address. So, number one, obviously, the dental market is the primary market here. But like you just said, it's not the only market, and the video said that as well. What percentage do you foresee the dental market being for you?
Yeah, let me.
Or what percentage is it right now, and then going forward?
No, if you look at the revenues in our business model, historically, we have been more than 2 decades present in the dental business. Now, you're saying that the dental business is the most important business for us. I would like to challenge that because from a growth perspective, the entrance in the medical business is one of the key growth drivers for our company moving forward. But to your question, the revenues historically and also this year are primarily from the dental business because the company is at a turning point. We want to move away from the typical research and development type of company that we used to be into a commercialization phase, an early commercialization stage in the medical business. And we've made inroads this year in particular in the medical segment. So the dental segment for us is important because, with the recovery of the dental business, it substantiates, it stabilizes, supports, our financial situation. Whereas, moving forward in the next coming years, the growth of the company will come primarily from the medical business.
Interesting. Okay. So the other point that stuck out to me here was the high margin recurring razor/razor blade business model. That's interesting. So tell us exactly about. So these are obviously disposable, right? But tell us about that.
Absolutely. So both in the dental and the medical business, like you say, we are using the razor blade model. So a capital equipment component and then a single-use sterile disposable to be used for each patient. So the margins both on the instrument and the disposable side are in the high 60%. And, we have been, like I said, for 2 decades, more than 2 decades in the dental business. We have performed more than 90 million procedures. We have about 20,000 units installed worldwide. We are present in 60 countries. So that's the reason of the business model. Of course, we enjoy the recurrent revenue streams on the disposables. Now, in the medical business, more importantly, we entered the epidural space and not so much of the size of the addressable market being $5 billion, but moreover, the strong belief that we could solve the problems that are associated with performing epidural analgesia during labor and delivery. We aim, and is our vision, to become the standard of care. And giving you a number, out of 4 million births on an annual basis in the United States, 2.4 million procedures, epidural analgesia procedures are performed. So if you translate the standard of care being 2 million procedures per year, In combination with the high profit margins on our disposables, that would result in an $80 million net profit for the company alone on the consumables on an annual basis. And we believe that that's a very compelling proposition.
Can you explain? The video did touch on this, but can you explain again, just like how exactly is it painless?
The main reason, so the difference between the dental and the medical businesses. In the dental business, you use it primarily for the injection of a local anesthetic by controlling the flow. So with a low speed of injection, you don't harm the tissue. You have a very fine, thin needle that makes it possible to make that injection virtually painless because of controlling the flow rate by measuring the pressure at the tip of the needle. In the epidural space, it is related to the placement of the epidural needle in the epidural space. And what we are doing there, we are not injecting the drug, but what we are doing there is we measure in real time any pressure changes at the tip of the needle. The soft tissue in the human body, each tissue has its characteristic pressure signature, so you can really differentiate between true loss and real loss of true loss and false loss of resistance, so to say. These procedures are associated with 17% false loss of resistance results. So when we advance the needle and using our technology, you know exactly in which tissue the needle is going to enter. Also, when it hits the ligamentum flavum, and then when the needle enters the epidural space. And that's what you see by measuring characteristic pressure peaks and pressure feedback. It's an unique guidance of advancing the needle in the patient, making the needle placement very precise, and also the verification of the placement of the needle in the epidural space. 5% of all the procedures actually get worse, because if the needle further penetrates the epidural space and it hits a membrane called the dura, you get cerebrospinal fluid leakage, and that gives all these side effects like headache, paralysis, and mortality. So we're reducing those morbidity rates to almost 0%. So they're very safe, and that is also giving a lot of cost benefits for the healthcare institutions. On average, using our technology, cost savings of $504 on average can be obtained. Now, in hospitals with 12,000 epidural procedures, that is a cost saving for the hospital of $6 million.
The last point on that slide that stuck out to me was the 20 years of patent protection. How important is that?
Patent protection is, of course, for several reasons important. Immediately, it protects the business areas that we are active in. Longer term, when the company develops over the next couple of years, which gives us other opportunities, for example, in the long run, looking at partnerships or M&A opportunities. This is not immediately. It definitely also substantiates the valuation of the company. But mainly short-term from a business perspective, we want to avoid that there are any copycats or knockoffs of the disposables to be used with our capital equipment.
And I see a couple questions in the chat. Well, I'll get to those in a second. Arjan, just where are you in the? Obviously, this is a fully approved device. You're using it. It's out there. Where are you in sort of the life cycle of it in terms of growth, in terms of new use cases, as we kind of talked about, have we seen the hockey stick growth already, or has that not occurred yet?
That's a good question. So first of all, I would like to state that the company is financially very healthy, and when I took over as a CEO of the company this year, I was in the fortunate position that at the end of last year, the capital raise gave us a runway of 2 years, and also during this year, we still have enough cash at hand to continue that runway for the next 2 years. So from a cash point of view, we are very lucky that we have, at the end of last year, $14 million cash at hand, I reported at the end of the third quarter that we have $14.5 million cash at hand. So the way that we have, and we have no debts, we don't have any long-term debts, and the way that we have used these funds, so to say, made it possible for us to really invest in the build-up of the medical business, and that resulted that we have a direct sales team in the United States for the medical business. As of July, we have 11 people in our organization, purely sales-driven, a very strong person with a strong background in the anesthesia field. And that has given us the opportunity, as we have released in the last weeks, a hospital in Florida. But more importantly, it gave us the opportunity to enter into the pain segment, in the chronic pain segment, right? Because the technology can not only be used during labor and delivery, but also very important for the pain management segment in terms of chronic pain treatment. So, for example, you have to place the needle in the epidural space and then they inject steroids. And that market is, at least twice the size of the labor and delivery market. So that gives us an opportunity to enter and tap of new markets as well, right? I'm not saying that we don't focus on labor and delivery, not at all, but it is important for the medical business that we serve the anesthesiologist. We want to take an active part for the training and education of the CRNAs, which are the certified registered nurse assistants, and thereby, entering and increasing the adoption and penetration in the medical business. Now, to your point, have we seen a hockey stick effect of that yet? No, not at all, because we are in that early commercialization stage. This year is really, for us, important to create the basis and the baseline from which we can build further in next year, and then enjoy recurrent revenues of hospitals that we have entered this year, enjoy that recurrent revenue, as well as expanding in the hospitals, as well in the ASCs, as well into the pain clinics. Importantly, the dental business is, of course, I'm very pleased with that development because there's a strong recovery in the dental business. We reported 7.4 million in revenues at the end of Q3, so the first 9 months of the year. I will not compare it with last year because it was heavily hit.
I appreciate that.
Hit by COVID, so I will not go there. I know from a financial point of view, you're not looking many years back, but if I compare it with the full year results in 2019, we had over the 12 months revenues of 8.4 million. So the 7.4, we're trailing very nicely on the recovery of the dental business, and I'm very positive about the continuation of that development. Now, moving forward, what we are doing as a company, we definitely want to grow further the dental business by undertaking the right marketing and sales activities. We are investing in the organization. I'm also very pleased to mention that we have, recruited a very experienced dental sales leader in the name of Andy Molnar with an extensive experience in Straumann for U3D, also have worked in the medical healthcare industry. So we are also investing in the people, in the right talent to further develop and grow the dental business, which I think is important to mention. So we grow the dental business, we increase the adoption and penetration in the medical business, and at the same time, what is important, we are not a typical dental nor a typical epidural company. The main competition, and I didn't even mention that for you, but the main competition today is the hypodermic syringe out of 1860, and that was later in the early 1920s positioned as the loss of resistance technique, right? So that's the main competition that we are facing and that we are having. So it's really for us, taking drug delivery from the 1900s to the 21st century, growing the medical business as well, and then that will further substantiate the growth of our company moving.
Okay, so there's a question while the video was playing, could you put the COVID vaccine in this? Theoretically, yeah, right?
That's a good question because we have received questions about that. If we would enter,
I bet you have.
But we didn't do it. Yes.
No, why not?
No, because at that time, we are a small size organization. All the focus was really in entering and penetrating the medical segment. We started the commercialization at the end of 2019.
Mm-hmm.
Then it was hit by COVID. The hospitals were closed. Our representatives were not allowed to come in front of the hospitals or the vendors. So,
Sure.
It was difficult to do that, and we maintained. We also, maintained to focus on the strategy that we were having and that we had decided to execute on, and we wanted to, I always say, deserve the right to play in the medical segment, which is so important for us. So we need to be full focused. We need to execute on our strategy that we have decided upon. However, moving forward, there are definitely other areas where our technologies could apply. Think, for example, cosmetic medicine for the injection of Botox in cosmetic medicine, intra-articular, the injection in the joints, in the wrist or the shoulder or the elbow, peripheral nerve block for lower the periphery, let's say anesthesia during those procedures. There are many opportunities. So part of the funds that we are having, we are also investing that in research and development projects. And like I recently announced, we are working on a new capital equipment plus disposables, and that we will announce later when we have more information on that.
All right. Arjan Haverhals is the president of Milestone Scientific. All of you with needle phobias, pay attention there. Arjan, a pleasure to chat with you. Happy holidays, happy New Year. Thanks for coming on All Access.
Thank you.
All right.
Thank you. Bye-bye.
All right. Let's bring on our next speaker. Actually, no, before we do that, let's play a quick video we have about the next company, and then we'll bring on Rory Cutaia, the founder, chairman, and CEO of Verb Technology. But I do have a video to play, so let's do that right now, and then I'll bring on Rory here.
The technological convergence of entertainment and shopping has begun. The phenomenon that has transformed how people purchase goods and services in China is now expanding to the US, and experts predict it will be even bigger here. The data coming out of China is truly compelling. $425 million in product sales generated through a single live stream, more than $75 billion of live stream sales generated in a single day, and more than 500 million people purchased products through live stream shopping events in China last year. U.S. consumer brands are looking for live stream and interactive video-based shopping solutions, and major social platforms are now testing their own versions of shoppable video. Now imagine that instead of just attending single live streams or one-off shoppable video events, you could visit a centralized online destination where shoppers could explore dozens of these events across numerous product and service categories, hosted by people from all over the world on 24/7. A platform where shoppers can communicate with hosts through an on-screen chat visible to all shoppers, answering questions live about the products, and then simply click directly in the video and place items in your on-screen shopping cart, all without interrupting the video presentation and shopping experience. And as easily as flipping through videos on any of the popular social media sites, those shoppers could spend the next several hours visiting any number of other shoppable events to meet up and chat with friends, to watch, shop, and chat with the hosts, to discover new products and services, and quite simply, to become part of an immersive, entertaining shopping experience, all while your shopping cart follows you seamlessly from event to event. Introducing Market, Verb's new social shopping platform. We've reimagined the e-commerce shopping experience. Consumers have grown bored with looking at static images and reading reviews when making online purchase decisions. They now prefer online shopping over traditional retail and are drawn to online outlets that provide a social, interactive, fun, entertaining experience. Market is a multi-vendor platform with a single follow-me style unified shopping cart and robust e-commerce capabilities with tools for consumer brands, big box brick and mortar stores, boutiques, influencers, and celebrities to connect with their clients, customers, fans, and followers by providing a unique, interactive social shopping experience that will keep them coming back and engaged for hours. Market will also incorporate our Verb Live attribution technology, allowing vendors to leverage extremely powerful built-in affiliate marketing capabilities. With this feature, shoppers who refer their friends to vendors' sales events will be compensated when those friends purchase products, driving greater attendance at the events and broader accelerated adoption rates. Market is an entirely new platform, representing what we believe is the state-of-the-art in shoppable video technology. Welcome to a new social shopping experience. Welcome to Market.
Cutaia, from Verb. Rory, I just got used to e-commerce like a year ago, and now you're telling me I gotta get used to like a whole new thing. Is that? Oh wait, Rory, you're on mute right now. Can you just unmute your microphone? Sorry about that. There you go.
Spencer, you are a super tech savvy guy. What are you talking about? You just got into e-commerce last year.
I said I just got used to it like a year or two ago. Now I gotta brace for more change. Is what you're saying?
Well, you don't think of it as bracing for it. You look, you're on screen. You're making people entertained. Everybody wants to be entertained, and so do you. So when you're shopping now, you want to be entertained, and that's what this is all about.
Okay. So that was weird. And I hope that's fixed now. Tell us more about Marketplace. I mean, it kind of sounds like you're competing with the Shopify's, even the Facebooks of the world. Is that the idea here?
No, we created something really that's entirely new and complementary to a lot of the things that those other platforms are doing. Actually, we partnered with Shopify with regard to some of the technology behind this. So it's not really a competitive situation. We're creating an entirely new experience, a new way that people want to shop. Look, people don't, as said in the video, people just don't want to look at static images and read reviews. They want to chat with their friends. They want to bring their friends along when they're shopping. They want to ask questions in real time of the people that are pitching the products and get answers. Talk to other shoppers in real time, not just read some bogus reviews, right? And that's what this is. And then take that a step further with our attribution technology. That's where it really goes to the next level, because now people will be able to go to the platform and look for those vendors, those hosts that have activated that attribution feature for their upcoming shopping event, and generate an invitation for themselves, send that to everybody on the planet that they know. And then when anyone that they've sent that to attends that shopping event and purchases product, they get compensated. And the compensation ranges from actual cash to discount coupons, tokens, NFTs, a whole bunch of different things as determined by the vendors. That's different. Nobody's doing that. This is what's going to drive this thing.
So we're not in beta. We're live, right? The market is live. What's next?
Well, we have a big launch coming up in February. We'll have a series of sort of pre-launch events that will draw people to it. I think people are going to be pretty impressed with the platform. And look, we're super excited because this changes not only the world of how people are going to shop moving forward. And by the way, this is not just us saying this. I mean, you saw the data coming out of China. It blew up in China. I mean, crazy data coming out of China. People are doing hundreds of millions of dollars in gross merchandise value in a single live stream. It's nuts. It's just starting here. And I think people are going to embrace it because they're used to like QVC and home shopping network style shopping. This takes that to a new level. So not only are we changing how everyone's going to want to shop and combining it, converging it with entertainment, but is it going to change our company in a meaningful way. And it's going to be a good couple of years, I think, for ourselves and I think all of our shareholders.
Yeah, you're totally right. China's like way ahead of us in this arena. Let's talk about though, like how Verb makes money. Actually, let's actually walk through the entire marketplace of market here. So whether from the streamer's point of view, from the vendor's point of view, from Verb's point of view. Well, the vendor's point of view is pretty evident, but from the streamer's point of view and from Verb's point of view, what does the marketplace / business model look like here?
So we will take a percentage of the sales revenue, right? This is the gross merchandise value that's generated through the platform. We'll take a percentage of that. And then we'll also have a sort of a SaaS revenue, recurring revenue component to it, where people, brands, big box stores, luxury brands, even boutiques are going to want to reserve a particular time slot. They're going to look for some premium placement on the site. You know, the other thing that's really interesting about what we're doing here is that everyone that is a vendor using the platform, they also get their own online store that's open 24/7. So they may have just had an event yesterday, but a lot of people will be talking about that event. And I saw this product and I wish I would have bought this. They can come back to the site, go to that vendor's store and buy that product. So there'll be recurring revenue associated with that for us as vendors look to activate their stores and enjoy, you know, particular kinds of placement, premium placement around the site, and we get paid for that too. So it's there's a multi-revenue stream for us, and for vendors. There's a lot of companies now, big companies that are coming into this trying to do their own version of live stream shopping. Just over the past month, yep. I think we've seen Nordstrom, Target, Walmart, Hasbro. I mean, the list just goes on. And these are just, you know, one-off events. Well, wouldn't they do far better if they were on a platform like this, where not only are they going to attract an audience from those people that they invited, but they're going to attract people that came on to attend another event, that are going from event to event, again, as their shopping cart follows them. So this is really different, and this is what the value proposition here is for vendors.
There's a lot of questions in the chat. I have a couple, but the chat is fired up here, so let me just get to a couple of these right now. And I'm going to try to go in a chronological order if I can. Okay, there's a lot of questions about the kind of vendors you already have on the platform. Whether we're talking about for the launch event or beyond that, what can you tell us about the vendors you have currently or you have lined up?
So look, you know, we're obviously a public company, and we have to be careful with disclosing material non-public information. But I will tell you that it's our intention to press release all that information. We'll share who's going to be on, when, what those events look like, you know, how we're doing. We're even going to share, you know, gross merchandise value that's generated through the site. We want to begin conditioning analysts and other investors as they look at our company, what are the important metrics to take a look at? So we're going to be disclosing as much as possible. Unfortunately, I can't do that now.
That's a really great question, because I'm almost wondering what is the important metric? Is it daily active users? Is it total views? Is it gross merchandise volume? There's probably a lot of different ways we could measure the success of the market platform. I don't know if you have any insights as to like what you're focused on.
It appears, based upon what we're seeing, that gross merchandise value, the gross value of products sold through the site is a key metric. Also, the number of attendees for events, you know, those are also important metrics. But it appears that right now that is the top number, and that's what we're really super focused on.
Do we have more details on the soft launch? Some people in the chat 1 to 10. They want to know how, where, when. Who.
I know. You know, I'm getting this, like, you know, throughout the day, every day, into the night. I wake up with it. I know people are super excited about this, and I'm glad. But I promise I will make sure that everyone is aware of it. We'll press release it. We'll put it out in the newsletter. We'll put it on the website. We'll make sure that everybody knows.
Okay. Couple more questions here, and I'll just hit on the rest of the chat, but then I do have a few more myself. Is can you see? Well, no, actually, NCal, we already answered that, and a lot of these questions are frankly repetitive, and we've kind of already answered a lot of them here. One company that was brought up, I'm curious if you could maybe compare if Verb is in the same ballpark or not, is Wish, which is of course, e-commerce, Chinese company, recent IPO this year. Are they? How do they relate, if at all, to you? And you can say that they don't.
Well, I mean, I'm familiar with the company. I think it's actually a pretty cool company. So they don't do live stream shopping at all. They're sort of a competitor, I would think, to something more like Amazon. Not really us. It's different. But what is interesting that they're doing, and you will absolutely see that in ours, is they are to a great extent eliminating the middleman. So you have a lot of factories going direct, selling direct to consumers on the site, cutting out the middleman, lowering the cost of products. And I think we're going to begin to see that happening in the United States as well, and other parts of the world. And there are a number of companies that are springing up right now that are major challenges to sites like Amazon, because they are cutting out middlemen. And we think that we're going to be a premier platform to attract those kinds of people as well.
While the video is playing, so on the chat goes, this reminds me of HSN, and it does, but HSN, HSN was an 80s innovation, right? Or maybe even before that, right? This is obviously HSN, but for the internet, right? And social media and e-commerce.
Yeah,
Would you agree
this
with
is
that?
HSN. This is HSN on steroids.
Right,
And,
right.
This is for today's generation. And you're going to be able to click right as you're watching and place things in your cart. Go from event to event. It's completely different experience. But again, we've had now generations, decades of HSN and QVC conditioning American shoppers exactly for what we're doing. That's why I think the adoption here is going to be even bigger than what we've seen in China.
And just to clarify it for the chat again, we don't have an exact date yet on the soft launch, correct?
Correct. It's there's a lot of things that we're working through right now, coming up on year end, and we're cramming in. We've got a lot of different companies, a lot of different people that want to be in the initial launches, and we're trying to choose very, very smartly, because first impression is super important. And also, we want to make sure that if we anticipate a big volume of people attending, I want to make sure that the vendors actually have the merchandise available to fulfill the orders. And that's a problem that we've had. Supply chain issues have been rampant, and there's a lot of vendors that want to come on, and they don't really have the merchandise to fulfill it, and we're just not going to have that. So we're working through those kinds of issues now.
Okay, so without getting too specific, what are the types of consumer package? Because what are the types of products that in your opinion are the best fit? We're talking consumer package goods. We're talking electronics. I mean, what areas of the marketplace are do you think are the best fit here, or is it anything on e-commerce?
Yeah. So first, we want this to be extremely broad in terms of the types of products, categories of products that will be available. And by the way, this is going to accommodate hosts and products and vendors from all over the world 24/7. So you may be watching somebody broadcasting from their store in Michigan, and then jump to somebody broadcasting out of Singapore. So it's going to be really, really interesting how this works. But what do I think would be like the best kinds of categories that people will embrace? Our research seems to indicate that food and beverage is going to be huge. I think fashion maybe is number 2, cosmetics number 3. Those kinds of things I think are gonna really take off. And then I have some of my own sort of favorites that our research does not really support as being big, but nevertheless I'm gonna put it out there because I think so. And many times I've taken a contrary position and turned out to be right. I think tech is going to be huge. I think there's going to be stuff for guys, right? Stuff for kids. There's going to be categories I think that are going to be really interesting.
All right. PC fanboy, I see your question. He's asking about Verb mail email integration. Do you have an ETA on that?
Yeah, so we've done an integration of our technology into Microsoft Outlook. That's been out, the free version. We have a pro version that's going to be out literally any day. You know, I've been promised by my team they're going to get it out before the end of the year, and I think that they are intending to stick to that. The pro version really takes Outlook becomes all of a sudden Outlook becomes an amazing video-based sales tool, interactive video-based sales tool for anybody that has an Office 365 subscription. So the Pro version takes it to a whole new level. We're also trying to get the integration into Google's Gmail out at the same time. So we've got a lot of stuff on our plate, and I made promises to get this stuff out by the end of the year, and damn it, we're trying our best to make it happen.
The two other integrations here that the chat's asking about are live sport and metaverse. I'll let you pick one. What are the potential, what's the word I'm looking for, synergies there?
I think there's enormous synergies there. As a corollary to market, we've created something called Verb TV. Now, Verb TV will come out and will launch after market, but right behind market. And what Verb TV does, and you can see it here on screen, it is truly the convergence of shopping and entertainment. So traditional kinds of television entertainment will be on Verb TV, but all of it will be shoppable. And I've been saying for years that we're going to see the convergence of pure entertainment and shopping. And now the technology supports it. The infrastructure of the internet supports it. And we've been working on this a long time. So on Verb TV, you could see sports. And we're working on those kinds of relationships right now, among other kinds of entertainment, because it changes the revenue stream for these kinds of organizations. And it's pretty meaningful. So yes, you're going to see a lot of those kinds of things between Verb TV and market.
All right. Rory Cutaia is the founder, the chairman, and the CEO of Verb Technology. Rory, the chat was as fired up for this one as anyone as any guest we've had on today. So I guess it's heads down for you. We're looking forward to seeing this off along. Thanks for coming on All Access today.
Thanks so much, Spence.
All right. I'm going to keep the show moving here. If we can get some likes for Rory. And hey, look, I try to live up to my word. I said, if you ask a question, I will ask the question. I feel like I did a pretty good job of that. There was a lot of questions. Obviously, I didn't get to all of them. I apologize. We don't have all day here. But I feel like I did a decent job there. I appreciate any feedback on that front, but I feel like we got to a pretty good amount of the questions from the chat. Yeah, John, we don't have all day, unfortunately. We got to keep going here. And I'm going to move on to our next speaker now. We're going to pivot. Thomas Equels is going to come on right now, and we're going to pivot again back to biotech. So where is Thomas in my stream here? All right, there he is. Thomas Equels, the CEO of AIM Immunotech. Let's get him on the show. Tom, what's up, man? How are we doing today?
Hey, good morning, Spencer. Thank you for having me.
Thank you for coming on. All right. I know I've got some slides here, but I need you to explain like I'm five what AIM is doing.
Okay, we have major initiatives underway with a number of clinical trials in both areas. In oncology, we're making tremendous progress in developing our drug Ampligen, which is a double-stranded RNA toll-like receptor 3 agonist as a single agent therapeutic in oncology, as well as working to develop it as a combination therapy with checkpoint blockade drugs, again, in oncology.
Okay, so we're talking oncology here. That's the bottom line.
Yes, probably the premier item here, and when I became CEO, I deliberately repurposed Ampligen into oncology, and this was the first study that we initiated, which was in late stage, locally advanced and metastatic pancreatic cancer. We got permission for this early access program in the Netherlands. It was a perfect opportunity for us because we did a parallel investigator-sponsored analysis of this, and unlike most cancer studies, which can cost up to $100,000 per subject, we had 27 subjects, And at the end of the day, we were actually paid $600,000 through reimbursement through the Dutch social medicine concepts for the supplying the Ampligen. But the result, this was the first study in oncology, and it takes time to get results in oncology, of course.
Right.
But we established, if you go back to that slide, you'll see we established a significant extension of life over the standard of care, 7.9 months. And this was with a high level of statistical significance, a p-value of 0.035. So we're following up on that with a clinical trial, actually clinical trials. If you could go to our clinical trial slide, and we can sort of go over what we're doing in oncology. And I think everybody out there that's a long-term investor understands when you take, you know, something from this startup phase, introduce it into oncology, if you're able to achieve a significant extension of standard of care in an area where there's a large unmet medical need and a lethal malignancy, there's long-term value to be had as we move through the process and achieve more and more data on these lines. But this list of our clinical trials that are ongoing, you know, is very significant. We have a phase 1/2 study going on in advanced recurrent ovarian cancer. The treatment of those subjects is complete. We're awaiting the publication of the data. That's at the University of Pittsburgh Medical Center. It's supervised by Dr. Bob Edwards, one of the premier world-class experts in advanced recurrent ovarian cancer. And again, advanced recurrent ovarian cancer is an unmet medical need, and it is a virtual death sentence for anybody who has it, because, you know, once you get to this stage, there are no other therapies left. And based upon that, a second phase 2 study has been initiated, again at Pittsburgh, combining our drug Ampligen with Merck's drug Keytruda in a combination therapy analysis of Ampligen's impact enhancing the effect of Keytruda in advanced recurrent ovarian cancer. And that's a 45 subject study funded by a Merck grant. And we're probably about halfway through that in terms of the number of subjects. So it's possible that we'll have a interim report at some point. I don't know whether the Pittsburgh will publish that or not, but we're making progress in that phase 2. And we believe this is very important work that we're doing, and it's work that enhances our value. Then at Roswell, we've got a phase 1/2 study in triple negative breast cancer. Here, that study in terms of the treatment of the subjects, it's done. We're awaiting the publication of the data. That could be anytime in the next 2 quarters. You know, we don't have control of it. Almost all of these studies that we're talking about today are investigator-sponsored studies. So in that case, Ampligen is not the sponsor, but rather a collaborator, and the investigator at these top cancer centers, you know, control the data, the analysis of the data, and the publication of the data. So we have to be patient and wait for it, but it's coming. We also have a similar study in colorectal cancer. Now, the triple negative breast and colorectal cancer studies were both looking at the biological and immunological impact of combining the Ampligen with Keytruda. Both of those involved Keytruda as the combination therapy. Those were not big enough to have survival data derived from them, but important immunological data will come from that. We also have in early stage triple negative breast and prostate cancer, again, Ampligen in combination with various other agents. And finally, we are working to initiate, both in the United States and in Europe, or probably at Erasmus again, a phase 2 randomized control study, which will be designed in a way that the data from that can be used, we hope, for new drug approval eventually. assuming that it's positive data and assuming that it supports the data from the first Erasmus study, which I discussed earlier in that 27 subject study. So we're making big progress in oncology, but oncology is a long-term investment. For example, that Erasmus project, I initiated that towards the end of 2016, and we're now getting publication of the detailed data probably in the next quarter or two. But what's interesting is in a study where virtually every one of those subjects was had a life expectancy, a very short life expectancy. Some of those, the last time I checked, had still survived even after 3 and 4 years. So that's very important that we get that up and running and push towards fast track approvals and a strong phase 2. And if that phase 2 supports it, we're going to seek breakthrough approval and go into a phase 3 for new drug application.
There was a lot there, Tom. There was also a lot of questions in the chat. I hope that answered a lot of those questions. Because
it may. I tried to cover a lot of ground. We make an effort to be as transparent as possible. We can, for example, when in these investigator-sponsored studies, when the study's complete and they're analyzing the data, it's the investigator that publishes the data, because that's why they're doing it, to do a publication, and we have to wait on that. So I'm not allowed to. Some of this stuff is confidential until it's actually published. So we have to respect that, and that's a drawback over if it were a name-sponsored study. But the benefit is that we're not paying tens of millions of dollars to conduct these studies. Now, in antiviral,
we might as well keep on rolling.
Okay. I mean, if you have a question, I'm happy
to. No. This is what I would have asked you anyway. So just keep on rolling.
All right. Well, in antiviral, similarly, we're moving in a very strong and positive direction. Ampligen has been used as an exploratory antiviral therapy in preclinical work for many years, in certain lethal viruses, for example, SARS-1, Ebola, and I'll talk a little bit about that in just for a moment to set the stage for what we're doing right now. For example, in SARS-1, in 2 NIH contract experiments conducted at the Antiviral Institute, one of the world premier antiviral institutes in existence at Utah State University, mice that are genetically designed to replicate the human response to the SARS virus. This is the initial SARS virus. Were subjected to a controlled experiment using a number of different antivirals. The first experiment was to see the effect of reduction of viral titers, or the viral load in the lungs of the sacrificed mice. And in that study, only Ampligen showed at clinically achievable doses the ability to virtually eliminate virus from the lungs of the SARS-infected mice, reducing viral load to undetectable levels. That was followed up by a second NIH contract experiment where it was a survival experiment, and again compared to a bunch of a broad spectrum of other antivirals, let's call them competitors. And there, at clinical achievable doses, only Ampligen, compared to a mouse population that had 100% mortality, Ampligen achieved a early onset or prophylactic result, achieving 100% survival with virtually no symptoms. This is very important because it's showing that the drug has a powerful antiviral effect. Perhaps based on that, the Department of Defense, USAMRIID, when the Ebola outbreak in 2012 occurred, 2012, 2013 in West Africa, and there were tens of thousands of people infected and over 10,000 died, I believe. Ebola became a concern, and they asked us to supply Ampligen for a USAMRIID experiment That's the Bio Level 4 lab, Army lab at Fort Detrick. Private companies aren't able to experiment much with with a disease like Ebola because it's so lethal. But in that experiment, the control group that was infected with the Ebola virus had 100% mortality. The Ampligen group, low-dose Ampligen group, had 100% survival and no indication of adverse symptoms. This is with an early onset therapeutic. So that told us that we have a powerful opportunity as an antiviral. Now, the problem is, when these lethal viruses come and then the epidemic is over, nobody has a commercial interest in that. Now, with COVID, we were presented with an opportunity to be able to advance our studies in Ampligen in humans. So if we could go to the slide about our antiviral clinical trials that are underway, just to discuss what we're doing and why we're doing it. The first bullet point you see on this, it talks about a phase 1/2 human. This is a human clinical trial being conducted at Roswell Park with individuals that are cancer patients who have COVID-19. So that's underway. That was FDA authorized, and it's moving forward. We're working very hard to develop Ampligen as an intranasal therapy. Now, some might ask, well, why do you want to do that? When a lot of the preclinical work was IV or subcutaneous. The reason we want to do that is because intranasal is where respiratory viruses start. Virtually all RNA respiratory viruses begin in the mucosal surfaces of the nose. And Ampligen, we decided, had a tremendous opportunity here, but we had to first do safety studies to show that Ampligen was safe as an intranasal agent. And we conducted those studies at one of the top European labs, the Center for Human Drug Research at Leiden University in Holland. And we had a broad spectrum of doses, and we were able to achieve clear data that Ampligen was generally well tolerated at all of those dosage levels. And this is important for some of the next things that we're going to do, which include the third bullet point, which is a human challenge trial that we're working on getting initiated. We're trying to get that initiated in the first quarter of next year, working very hard to work out the details of that. And that human challenge trial will explore intranasal Ampligen as a prophylactic broad spectrum against a variety of respiratory viruses, RNA respiratory viruses.
All right. There's a bunch of questions from the chat, Tom, that I want to get to. I can't get to all these guys. I'm sorry. Let's just start with, oh my gosh, I don't even know where. Let's just start with the status of the COVID. Oh, you kind of already just the status of the COVID IV study and the intranasal early onset study in the U.S. You just kind of spoke about that. Do you have any clear timeline for us?
All right. Well, the question again is the status of the COVID IV study.
Yeah.
We have a phase 2 COVID IV study that's been underway at Roswell. We're trying to get FDA permission to do a IV and intranasal early onset study in the United States, and we're also exploring doing that in certain international venues. I believe we're going to be able to get something like that type of clinical trial up and running. The problem with treating people who don't have symptoms is that if they don't have symptoms, it puts a little bit of a burden on issues of the treatment might make them have symptoms that are worse than their asymptomatic condition. But what we're trying to prove here in those early onset studies is not only that Ampligen intranasally and perhaps intravenously would have a therapeutic effect in terms of keeping the virus at a no symptom or low symptom state. But we're also looking with the intranasal at the ability to create a enhanced natural immunity as a result of the natural infection, because we have a number of experiments conducted by Japan's National Institute for Infectious Disease, Dr. Hasegawa, showing that Ampligen intranasally in both non-human primates and rodents through epitope spreading created a very strong immune response enhanced by cross-reactivity through epitope spreading, which created cross-protection against variants, mutations, even other clades of the influenza virus. And then we repeated that study in humans and got similar results at the University of Alabama. So we're hoping to be able to demonstrate that we can achieve the same thing by taking early stage natural infection and creating enhanced immunity for those people who recover.
All right, Tom, there's a couple questions about the Erasmus pancreatic study and when we can expect data from that. And I'm going to pull that up on the screen. I'm referring to the bottom one there.
The bottom one, if you actually go to the screen that talks about pancreatic cancer, that's probably a better slide for what we're talking about.
Do I have that one? Yeah, I do. Yeah. Go back, Spencer. There you go.
There you go. Now, this is a study that where the data is complete. A clinical research report has been prepared. We've had the benefit of having this data, and we're authorized by Erasmus to provide this general information about what occurred. The detailed data is expected to be published in the near future, but I don't have control over that publication. The investigator, this is an investigator-sponsored study out of Erasmus. The investigator is publishing the paper in a very respected cancer journal, but it's going through the final review process. And then once that data is published, that data will be in detail put up on our website along with the paper. But it's important to note, we occasionally have detractors who want to take, this slide here and say, well, if there was real data, they would publish the data. Now, I've just explained why, we've got to wait for that paper to be published before we do it. But the actual detailed data, was the basis for this slide, was also the basis for our applications to both the FDA and the European Medicines Agency for orphan drug designation. And that orphan drug designation was granted by both the FDA and the EMA for Ampligen as a therapy for pancreatic cancer. So they looked at the detailed data as a part of their analysis. So this data exists. It will be published as soon as possible. AIM doesn't have control over the date or the time, but when it gets through the journal's review process, which we hope will occur in January, but it may be later in the quarter. But once it goes through that, the study will be published in the journal, and that paper, as well as the details, will go up on our website for everybody to see.
All right. I wish we had more time, but we don't. Thomas Equels is the CEO of AIM Immunotech. If you have more questions, guys, I guess I'd recommend reaching out to Tom and reaching out to the company. But we got to go here. So, Thomas, happy holidays, happy New Year. Thanks for coming on All Access today.
Well, thank you very much, Spencer, and happy holidays to you. And I want to thank you and all of the participants and investors that are watching for your interest in AIM Immunotech. We believe that the future is ours.
All right. Have a good one, Tom. All right. Before I bring on our next guest, I got another fun little video to play. Let's go ahead and play that guy right now.
If people are the lifeblood of your organization, then why aren't you using the most advanced security technology available to ensure their safety? Knightscope has helped fight crime at hospitals, apartment complexes, manufacturing plants, malls, corporate campuses, logistics facilities, parks, casinos, and schools. Secure the future by booking a demo at Knightscope.com today.
He's here with us. He's the CEO of Knightscope. William, welcome to the show.
Hey, good to see you, Spencer. How are you?
Doing fantastic. All right, we're going to talking security robots.
The robots are coming. They're coming after you personally.
Oh, not for my job, I hope. All right. Let's just start with this, and I have a lot of pictures and assets that I want to share as well. Walk us through like the business case here.
Sure. Crime has a $2 trillion negative economic impact on the U.S. every single year. It's a hidden tax we all pay in blood, tears, and treasure. We've got a recurring kind of societal problem, and we've got a recurring revenue business model to support it. So we provide these autonomous security robots on a machine as a service business model, and they are intended to provide a physical deterrence to help officers and guards handle their activities a lot more effectively. And then these machines also generate over 90 terabytes of data that no human could provide. So it's intended to provide, again, the officers and guards unprecedented situational awareness for them to do their jobs much, much more effectively.
What kind of surveillance are we talking about here?
These are intended to be, think of it as eyes, ears, and voice on the ground, 360-degree live streaming HD video and recorded. They can detect a person. They can detect the person. Can read 1,200 license plates a minute. I can run a thermal scan of the area. We can treat your mobile device as if it's a license plate. The officers can speak through the machine as if it's a mobile PA system, and that's just the beginning.
So talk us through who are your clients right now? What kind of sales do you have? I assume we're mostly talking about municipal police departments or maybe even private corporations as well, I guess.
So we've operated in the field for over 1 million hours. We hold contracts from Hawaii through Texas to Rhode Island, operating 24/7, 365, fully autonomous. There's no one remote controlling these. Our clients are in a variety of verticals: healthcare, casinos, manufacturing plants, logistics facilities, law enforcement agencies, as you mentioned, residential, HOA and kind of apartment complexes, corporate campuses, commercial real estate. Basically anywhere indoors or outdoors you might see an officer or a guard patrolling is an opportunity for a Knightscope.
How did this idea come about? I mean, the idea itself is so robots, right, but you went and did it. So
yeah, super easy. Just download everything from the cloud. It just magically appears.
All right.
So it's been 8 years of building all this technology from scratch. We've raised over $100 million to do it. We design it, we engineer it, we physically build the machines ourselves in Silicon Valley, all made in the USA, and we deploy and support them. How we got started, I'm a former automotive executive. I think self-driving technology, autonomous stuff is going to really change the world. I'm just in a disagreement on the path to commercialize it. I think a crawl, walk, run approach is much more palatable.
As opposed to what?
As opposed to the aerospace equivalent of I want to go to Pluto first and I don't want to stop over at the moon or Mars, which is basically a lot of the autonomous sector. Is $80 billion have been invested, 200 companies working on it. Their collective revenue is close to zero. We've generated over $13 million of lifetime revenue with real clients in the real world through 6 winters and 6 summers. And we, kind of been working on the 1 to 3 mile an hour range. And then now that we've got that kind of working, now we'll start working towards the 10 mile an hour range and, so forth and so on. And doing that in a much more methodical and careful manner.
When you or your sales team, goes out into the field and makes these pitches, I'm wondering what is the biggest piece of skepticism that you get?
The thing on the movie screen is now in front of me.
Yeah,
there's just
I would say so.
just disbelief that this thing works, and that's why we've funded the Robot Roadshow across the country. We've been through California and Florida. And we're just in Washington, D.C. for a couple of days. I mean, you can do as many webinars as you like, PowerPoint people to death and everything else, but until they actually see the robot in real life and like, oh, this is for real. It's not a prototype. Like we always get this, hey, cool prototypes. When are you launching? It's like,
yeah, right.
We've been in operation for quite some time now, and we have a track record. So if you go to Knightscope.com and go to the crime page, you can see all the positive impacts the robots have had on society already.
Have you ever thought about, and maybe you haven't, but have you ever thought about like other use cases? I don't know what they would be, right? But are there other use cases like non-mainstream?
No, absolutely not. So
okay,
95% of startups fail, and part of it is the CEO is not willing to have tough discussions and say no.
Okay.
Our stated mission,
I can respect that.
Our stated mission is to secure the United States of America and see if we can make it the safest country in the world. Us dabbling somewhere else off the radar screen is not going to fulfill that mission. And that's, the mission that we've committed and have a duty to deliver on to our 28,000 investors. So, no going off the reservation.
All right. So I've got the picture up there. That's what that's what the product looks like. Yes?
Yep, that's one of our clients at Houston Airport. That's a tricky one. We're patrolling the parking structure there, and they have those crazy kind of vortex or helical kind of ramps.
Mm-hmm.
So we're having to get the machine to go up and down those ramps was a little tricky, but we got it working.
Do people need a warning? Like, hey, travelers of the Houston airport, we have security robots that are moving around.
I think that's a great point.
Don't freak out.
I think a lot of folks, because we have so much field experience, I can tell you that one of the big faults is if a client refuses to properly introduce the technology to the tenants, to the students, to the employees, to the faculty, you're going to have a problem. Because in some ways, Hollywood has done us a service and a disservice over the last 30 years. People's expectations of robots do or can do to you is somewhere up here, somewhere in the stratosphere, and reality is down here somewhere. So if you properly introduce yourself, you have the robot cake, the robot naming contest, you explain why it's here, what it does, then all in favor of keeping the robot, everything works really well.
That's true.
You do the opposite, which
that makes sense.
Experience.
Yeah.
You we had a property developer no, the 350 residences here don't need to know. We're just going to do this. Drama ensued.
Oh man. Okay, so let's talk about what actually happened. So you've got the robot, it's doing its thing. Oh, it sees a crime. Then what?
Sends an alert to the guard or the officer. These are tools. It's kind of like the patrol car saw an incident happen. What's the patrol car going to do? That's kind of need to get the Hollywood thing out of your head. Yeah. And think of hey, you told me to be on the lookout for this particular person. You uploaded the profile pic, all the mobile devices, and the license plate. They were either at the casino last week counting cards, or they're a domestic abuser and the spouse reported the person to the corporation, or it's a felon or something like that. And so these machines, don't forget, they're consistent. They run 24/7. They don't take a break. Even while they're charging, they're working. And when that alert, that detection goes off, goes either email, text, phone call, or notification on the app or user interface, the guard now or officer can be in multiple locations at the same time with actionable data.
So you brought up a good point there. So as the guard or as the security officer or whomever the client, how much of it do I need to program for my specific needs?
No, so it's a machine as a service, emphasis on service. So we set up everything. It's all inclusive. We do the telecom, we do the data storage,
Okay.
data transfer, setup, electrical, docking stations, deployments, maintenance, service, 24/7. We're one throat to choke. We take care of it.
Okay. I can always count on our chat to ask the big questions. NCal is asking the $1 million question here. Obviously, when it comes to surveillance and data, we're talking privacy concerns. So tell us why we shouldn't be afraid of that here.
First, we're operating exclusively in public spaces. So the concept of privacy kind of really doesn't apply. You know, we're not in the conference room, we're not in the hotel room or the restroom.
But in terms of recording my license plate, not that it's not already out there, because it is, but like
you're in a public environment. So that's the first thing.
Right.
The second thing is our clients' data is our clients' data. You know, we get a lot of investors like, oh my God, these machines generate over 90 terabytes of data a year. You must have all this stuff, and then you're going to do something, either monetize it some way or do something nefarious with it. And it's like, well, that's not really going to help the country get better secured. So we contractually actually wrote in that the client's data is the client's data. We only use it with permission to improve our algorithms, but we're not selling it to Google or Facebook or, you know, someone else. That's, you know, not appropriate. And then the third thing, we're halfway through a nightmarish 2-year U.S. federal government cybersecurity approval process. If everything goes well, hopefully we'll have an authority to operate at the end of 22. But that speaks also to the, you know, kind of privacy concerns that the federal government would also have, and we need to be mindful of that as well.
I want to address, elaborate on something that you just said, because Matt asked it in the chat, and if I could, and I'll make a point of William, correct me if I'm wrong, but maybe the legal standing right now is like, if you're in a public place, you have no right to privacy. That's why when videos go viral of you having a screaming fit, or I having a screaming fit, you know, in an airport, we have no real recourse there because we're in a public place and we don't really have a right to privacy in a public place.
I want to pause you there. There is also a right to be able to go to school, go to work, or go to the movies without having the risk of being shot or killed. I mean, this is a fundamental problem. I don't believe the founders of our country would have ever expected us to build a society where that level of everyday risk for everyday citizens. And that's got to stop.
Why exactly are you, like you said, you were an auto engineer. So, I mean, like, what did something must have happened in your life that made you say, okay, I need to take my talents to creating security robots?
Yes, I was born in New York City. Someone hit my town on 9/11. I'm still profoundly pissed off about it. So the rest of my life, I'm dedicating to better securing our country. The country's over 200 years old. We're on our 46th president. The first role of government is to what? Protect its citizens. And how we can have crime and terrorism have a $2 trillion negative economic impact on the U.S. Someone shoots up a school today and no one gets fired. Like, they're not acceptable. I'm sorry, that we need to fix this. So that allows me to make long-term, multi-decade decisions, as opposed to being worried about, what they're going to say in next quarter when we're publicly traded. Like, I don't have the patience for that.
Well, you better get the patience because that's a great segue into my last point. Unlike all the companies that we've had on the show today, they are all publicly traded. You are in the midst of a Reg A plus offering, and I know there's a lot that you're not allowed to say for legal purposes, but maybe you can walk us through why you're going public in this way and the potential timeline there.
Sure. On December 1st, we announced that we're going to be working over the next 30 to 45 days to market an offering as part of a public listing on NASDAQ. Assuming all goes well, we'll be under ticker symbol KSCP. And to our knowledge, we don't know of any company that's gone public with 28,000 plus investors on the cap table. So it's a little bit complicated. Second, we're kind of focused on Main Street first, Wall Street second. So we use the testing the waters regulatory phase to kind of share the opportunity to buy into the public listing itself to our existing investors first, who helped write the first chapter of Knightscope's history, and then give them first opportunity to help write the second chapter. And if there's anything left, then we can have the broker dealers and the underwriter and bankers and the like market to the typical kind of Wall Street usual suspects. But we're kind of focused on the long-term mission. And I think people now starting to realize we're kind of serious about it. When we started the company, it's like, hey, you're out of your mind. This will never work. It's hardware, software, too complicated. Public security, safety, security, not an investment thesis. You need to go away. And now we've operated over 1 million hours, generated over $13 million of lifetime revenue, contracts across the country, and actual crime fighting wins under our belt. So I think people start realizing, like, we're not playing around. I'm not playing around. I'm dead serious about what needs to happen. On a more positive note, let's just say for 1 minute, you give the founder the crazy 30 seconds. Let's just say we achieved the mission. We made the U.S. the safest country in the world. Like, tell me what happens. Like, tell me what happens to property values. Tell me what happens to insurance rates, the volatility of financial markets. You want to have a discussion, an argument over infrastructure and education funding? Like, it literally changes everything for everyone. And we should not be living under these conditions. And we give our soldiers, 2 million plus soldiers, every level of capability you might ever imagine in a theater of war. And there's a Lockheed Martin, a Raytheon, a Boeing to build you whatever you need, right? We don't have that for the 1 million law enforcement professionals and 1 million security guards on our own soil. They have the technological equivalent of a number 2 pencil and a notepad. And that's because the Department of Homeland Security and the Department of Justice have no federal jurisdiction over 19,000 law enforcement agencies and 8,000 private security firms. It's literally the Wild Wild West with no one in charge, no risk capital, and no innovation. And therein lies the massive level of frustration and the massive opportunity.
If you're interested, the link is in the chat. The link is also in the description to Knightscope's page on Start Engine. Obviously, you're not going to be able to copy that text on from the screen, but click on the link. It's in the chat. It's in the description, and that gets you all the information as far as the offering there. Good question from Yeah, go ahead.
One more thing, Spencer. If we'll start wrapping up here. If folks you're asking questions and you miss it, if you go to knightscope.com/investors, the bottom blue on that page only, the little blue thing at the bottom, the little chat thing, that's not customer service. That's the CEO, me, answering investor questions 7 a.m. to 7 p.m. Pacific, 7 days a week. So I will answer your questions. It may not be in 7 minutes, but I will get back to you.
Okay, wait. Last one here from Hollis is asking about any contracts outside the country. Great question, Hollis.
Absolutely not. The stated mission is to focus on securing the U.S. First of all, we have lots of large investors outside the U.S. I've told our incoming awesome board of 6 independent directors that we just announced that when the U.S. is secured, we're in all 50 states. We have $500 million cash on hand, and we're bored out of our minds, and we have nothing else to do. Yes, we can go work on Argentina and Japan and China and South Africa. But I've worked on 4 continents. I kind of know what it takes to execute it. And we should not be adding that level of execution risk and putting our shareholders at risk.
All right. William Santana Lee is the CEO of Knightscope. The future has arrived. William, have a great rest of your day. Happy holidays. Happy New Year. We'll talk to you again in the new year. Good luck on the offering. Thanks for coming on All Access today.
And don't forget, long Knightscope, short the criminals.
You know what? It's a great slogan, guys. It's like bravo on the slogan. Something that I would have come up with. Have a good one, William.
All right, thanks. Take care.
All right, my next guest is the CEO of Victory Square, or is he the CEO? His LinkedIn says otherwise. Let's bring him on right now. Shafin Tejani, he's here right now. Shafin, welcome to All Access.
Thanks for having me, Spencer.
All right. First thing I noticed when I went to your LinkedIn page, your job title, you're the alchemist. You're the alchemist of Victory Square. What does that mean?
So when I graduated university, I was in a transitionary phase, traveling the world.
Yeah.
I picked up a book called The Alchemist by Paulo Coelho, and it became my favorite book. And I think just the definition of alchemist, which is basically turning dirt to gold. So for over 20 plus years, we've been investing early in tech startups. Generally being in the water when a wave comes, and have been successful. So that moniker and slogan has just kind of stuck with me for over 20 years. But great,
Right.
I highly recommend it to anyone.
All right. So tell us about Victory Square and the kind of company you are and who you invest in.
Yeah, so I mean, just to the alchemist phase, I'll give you a quick kind of background on my background. So I started in the dot-com boom, mid to late 90s. Was a young kid, saw how the internet at the time, Web 1.0, was going to kind of change the way we connected with one another, accessed information, and socialized. And we started an online dating site. And we were very fortunate. It was one of the early internet businesses that was making money. We became very good at driving customers. We then started to buy, build, and invest in businesses that we had some sort of competitive advantage. So either we could drive customers from one site to another, or that businesses that solved a pain point in our existing business. So we kind of refer to this as a venture build model. And that model worked really well. We went from dating to ringtones. Anyone that can remember, ringtones were
Hey, yes. What happened to that marketplace? It's gone.
It's gone, but it was a great business while it lasted, and into online gaming. And kind of rode that wave for 20 plus years, launching startups kind of globally all over the world. Today at Victory Square, there's a couple of things that are key. One is we are a global startup tech accelerator. So we invest early, we buy, build, or invest in companies very early that we have some sort of subject matter expertise in, a client for, some thought leadership. We're focused exclusively on disruptive innovation. So we've got 25 portfolio companies coming from all over the world. So we've got relationships with accelerators in India, Brazil, Europe. We've kind of handpicked 25 outstanding companies that are working on, in the Web3 space, digital health, virtual and augmented reality, which today is being referred to as the metaverse. A lot of really disruptive spaces. And we're a publicly traded company. So one of the reasons why we built VST was, as an angel investor myself, I wanted to have a public company. So I didn't want to be locked into a 5 or 10-year VC or private equity fund. I wanted investors around the world to democratize access to these next best startups in an audited, transparent, and kind of liquid way. So we built VST, funded by management. We put in the first $10 million to validate this thesis. And today we've got, again, 25 companies in a lot of disruptive areas. These are bright companies from around the world. And our business model is to, kind of buy low, build them up, and start to liquidate, some of our position at high valuations to kind of rebuild this funnel. Yeah, that's kind of Victory Square, kind of in a nutshell.
I think you would like my boss, our CEO, because he was also doing the online dating site game 20 years ago. He had like a bunch of websites that he had. You can actually talk about that. But also the ringtones thing was funny because I used to piss my parents off by buying 50 ringtones, and they end up seeing charges on their bill. The confluence of the private and public markets is so interesting to me because like they both have advantages and disadvantages. I remember last year, right when the pandemic hit and everything is hitting the fan in March and April, and everyone is a panic and we don't know what's coming next. And I remember seeing a tweet and it's something along the lines of, now I see the value of private equity and venture capital because my losses on paper are zero. Right, because there's no liquidity and it's all paper. Yeah. So, like, I'm just so interested in that. So, you said you obviously are in early stage. You're buying early stage companies, and then the business model for Victory Square is the exit down the line. What kind of exit is that? Is that another fundraise? Is that like an acquisition? Is it an IPO? I'm just walk me through that process.
Yeah, absolutely. So, I mean, our process. Is, again, we identify pain point, a space or sector we have some sort of competitive advantage in, and then we find a company kind of servicing that globally. Usually our entry point when we take a stake in a company, generally is around 4 million Canadian is generally the market cap,
Mhm.
and we'll take a material stake. So act as a co-founder, maybe take a 23-25% stake in that business. We then spend about 12 to anywhere from 12 to 48 months working with that business to kind of grow and scale them, and then spin them off. When we're spinning them off, generally they're being spun off around a $25 million market cap. They're going public on their own. At that point, we've reached already a significant kind of multiple. We take some money off the table to kind of, reinvest in new opportunities. So we built kind of this self-sustaining machine. So there's not a necessity to go, for outside capital. So this is one thing about this graph that's interesting is that we started the process in 2017 with 3 companies and a net asset value of around 4 million Canadian. Today, we've got 25 companies in the portfolio, and the NAV is around 110 million. Capital invested, majority of that's come from management. So again, we've put our money where our mouth is. There's really an alignment, for retail investors to know that like management's got skin in the game. But you'll see that over the course of the last 5 years, we've been adding 3 to 5 new companies to the portfolio. These are vetted companies as well. So for investors, they don't have to worry about all these new terms, whether it's Bitcoin, Ethereum, Solana, Web3, Metaverse, and be worried about investing in one company that's a one-trick pony. Here, they're investing alongside management that's vetting a select and curating a really good basket of companies. So again, we add 3 to 5 new companies a year. The NAV has grown from 4 million to 110 in the last 5 years. And our goal is to double the NAV every 3 to 5 years. And we're doing that by, again, getting some liquidity once our assets are spun off. One thing to note, I mentioned that this process takes 12 to 48 months. Last year was a big inflection point for us because we started in 2017. So one of the first companies, Fans Unite, came out, was spun out last year. And just as a case study, like this was a company we acquired for 2 million Canadian dollars in 2017, late 2016, early 2017. Today we spun it out last year. Today the market cap's probably about 180 million dollars. They've raised just under 50 million bucks. Done some large M&A transactions. Rockstar board management team, and again, we feel that business is going to continue to grow and increase the value that we own in it. So.
Do you have any rules or qualifications for any of your investments? For example, in the U.S., the I think it's the FinTech Sandbox. No, I don't remember who it is. And they have that famous rule where they only invest in companies that have more than one founder. They will always want a co-founder there. Do you have any rules like that?
Well, so the first rule for us is it's got to be a sector that we have some sort of competitive advantage in, or we have a client that has a big pain point. We don't like to go into things kind of blind or abstract. We want to have some sort of core advantage kind of in them. And one of the benefits is in an ecosystem with 25 companies in a variety of sectors, a lot of times when we're looking for something, it's because we've already got a big advantage within our ecosystem. So that would probably, I would say, the biggest is one of the first biggest criteria. The second is the founder. So it doesn't have to be one founder or multiple founders. Because we act as a co-founder in these businesses and we roll up our sleeves and get active, it's really important that we have an alignment with that management team or that founder because they're the jockey we're betting on. And when you're investing early, entrepreneurship's been glamorized. It's really, it's really a roller coaster. And we really have to find a founder or a jockey or founders that, can stay balanced throughout that volatile roller coaster. In so many cases, we found that, where we've had a lot of success in our portfolio companies, it's the founders have been able to kind of steer the ship through the adversity and stay in the game long enough to kind of hit that right timing. And last year was, great timing. If companies were able to stay alive, especially in the technology and disruptive sector, they hit a big wave, which allowed them to kind of, raise capital or grow and scale.
Yeah. What's so interesting, and someone on the chat just mentioned Kathy Wood. She invests in growth, you invest in growth. But the difference is that she's investing in public growth companies, you're investing in private growth companies. And on the private side, there is certainly less shall we say, turbulent a lot of the time, right? In terms of valuations, I mean, definitely not in terms of day-to-day operations and growth, but like valuations, fluctuate less on the private side than they do on the public side, and I guess that sort of gives you an advantage there because the line looks a lot smoother as opposed to like a stock chart that looks, subject to the whims of the market, right?
No, absolutely. And I mean, they're super familiar with Kathy and
did we lose Shafin? We were so good today. Oh no, he's back. We got you. Keep going.
No, I was going to say, there are a couple of things that are key here around that. So, ARK Invest, there are large passive investing, ETFs that exist that investors can invest in.
Yes.
The big premise here in private and global and the specific niche areas we go into is that for most retail investors globally, you either have to meet the criteria to be able to invest in a large private equity fund or VC fund. So one is access to that is difficult. Then the criteria is, a minimum investment of anywhere from $250,000 to $500,000. Then you've got these 5, 10, and now horizons are even, kind of pushing out. This was created again to put, a pool of early seed stage companies that are vetted that retail investors can get access to. So you can buy 10 shares or 1 million shares. It, really is agile in that for investors globally. And they're not necessarily having, it's liquid, transparent, audited. Like you said, with private companies, again, there's less volatility on valuation, but there's no transparency. Like just because there's no valuation, a lot of times you have no idea of cash flow or, are there going to be down rounds or, and it's not a liquid investment. So I think this was really created to fill a gap that we thought was missing. And when you look at, we're looking for asymmetrical returns. So we're going to sectors that retail investors might not understand. We mentioned just anything around Web3, NFTs, the metaverse. They're able to invest alongside management that's putting their own money in, but that's going to curate and vet that deal flow. You mentioned another thing too is the markets go up and down, sectors go up and down. By putting together, this portfolio, there's a lot of depth. So sometimes some sectors come out of favor for time, others pop back up. Here, again, we've got enough diversity and balance to kind of balance that out through that ride.
Any thoughts or appetite on an uplist in the U.S.? I know you're in Canada, so
definitely. We've started the process. I think we started on the CSC OTCQX in the U.S. and in Frankfurt, and we've explored in Canada uplisting to the big board, the TSX, and in the U.S. The NASDAQ. So we've looked forward to these things kind of towards mid to late next year. This year's been a really busy year for us. So, as a small cap company, we've issued 2 dividends and we're paying out a third. So it's kind of unheard of. So we've been very focused on spin outs. So, we had 2 companies spin out the traditional way, a third do a token sale to raise $10 million US. And so for us, the uplisting was something we pushed to 2022 just because there were some big objectives we wanted to get executed this year.
I was wondering where does a company like you get the cash for a dividend, but I guess you just answered that. Okay, what is next? Mitch in our chat wants to know. Tell us about the pipeline.
Yeah. So a couple of big catalysts kind of within the next, I would say, 90 to 120 days. One, we announced and declared another dividend, so we're going to be issuing it to shareholders by the end of this month. Any investor on record as of December 17th, I think that's the date of record, will receive that. We've got 4 companies that are being spun out as well. So one called Creator.co. So it's the creator ecosystem, the creator economy is a big focus of ours. They're a marketplace that connects brands with micro influencers, over 100,000 influencers on that platform. Yeah. We're preparing for listing on that company within the next 90 to 120 days. Turnium Technology Group, another company we own, which is in the SD-WAN space, is going to be listing and being spun off. Copilot.ai, it's a sales automation tool. It's considerable growth. Again, large holding of ours. going to be spun off. And then Stardust Solar, so it's a company that we have in the renewable space that will be spinning off. So investors can look forward to the upcoming dividend, the spinoff of those 4 assets. And then we're always incubating. I mentioned adding 3 to 5, companies, new projects a year. Some of the new ones in the hopper that I think people will be able to hear about next year are really focused around the Web3 space. So again, we put together some projects to allow investors to get access, so they don't have to own a wallet and worry about private keys. We're putting together a portfolio of some of the top projects being built on Solana and Polygon and Near and Cutaia and some of the other chains, so that shareholders can invest in a public company but still get access and exposure to what we believe are going to be asymmetrical returns for investors over the next kind of 3 to 5 years. And sorry, one last, we have a big focus in the digital healthcare sector. So we put out a corporate update about a week or 2 ago where we're going to be putting some big emphasis on the sales and marketing side of some of the IP that we have in that sector.
My next question was going to be, if you had to pick a sector, pick a favorite, but you kind of, I guess you just answered that with maybe digital health. Is that it? You also mentioned Web3, which
we've got our hands in a variety of different baskets. But if personally for me, the sector that I'm most excited about is everything around Web3, NFTs, the metaverse, DeFi, DAOs. Like I mentioned earlier, I started the .com boom, and again, at the time we saw how the internet was going to connect, change the way we connected with one another, and just did a variety of things. I feel like there's a massive change happening now that maybe over the next 3, 5, 10 years, really looking at where there's going to be asymmetrical returns. We love that space. We've been early in the crypto blockchain space since 2013. I generally feel like going where others necessarily aren't yet. The contrarian viewpoint is where we're going to get that big alpha. So to me personally, that's one of the sectors I'm most excited about. Apart from that, the next 2, digital health and the climate, are 2 areas which, again, we've got a strong presence in, and we think they're going to be big. But for me personally, what gets me super, super excited is everything around, the Web3, play to earn gaming. I see a massive shift happening there.
Okay, I got one more for you. And I'm generally, when it comes to investing, a glass half full bullish person, because that's the way the markets tend to go. However, I am sympathetic to those who perpetuate the idea that, this is just like 2000, because there certainly are some parallels. Tell me why 2021 is not like 1999.
So, that's 2020. I wouldn't look at it so much as 2021. I would look at it as, some of these sectors that, that we're focused on. So for me, I kind of look at, you mentioned Kathy Wood earlier. She talks about these 5 innovation platforms all converging at once, and that building, tremendous innovation building around those ecosystems. For me, I look at it as Web 1.0, Web 2.0, Web 3.0. So Web 1.0, from 95 to 2005 was really, about static web pages. It was really, democratizing access to information for us, but there wasn't a lot of interaction, a lot we could do. Web 2.0, which I'd say from 2005 to to today, where you saw social. So we let all these social platforms allowed us to kind of interact, communicate, connect. Blog posts, social networks were kind of the big driving force behind Web 2.0. But what happened was a few large central organizations basically dominated everything. Our privacy, we gave up our privacy and our data to be basically the customer. And where we see this big movement, which I think is kind of a reference point for this big changing of the guard, is really Web3 is power back to the people. So instead of 5 large organizations owning everything, you're seeing this decentralized to the users and builders who are building these ecosystems. So for me, the big reference point or parallel to that is this shift of thought, or how things are being built, or how things are going to be monetized and worked kind of going forward. It's still really, really early though, but I do believe that planting your seed in this space is going to create massive returns over the next 5 or 10 years.
All right, Shafin Diamond Tejani is the CEO. He's also the alchemist of Victory Square. Shafin, a pleasure to chat with you today. Happy New Year, happy holidays, and thanks for coming on All Access.
Thanks, sir.
All righty. All right. Hey, if there's one thing I learned today, one theme, especially in the last hour there, it's like, look, everyday investors are getting access to more and more early stage companies. And I don't even necessarily mean public companies, right? Look at what we just talked about with Shafin. Look at Knightscope, right? You can invest in Victory Square and get exposure to private companies. You can invest in Knightscope in a Reg A Plus offering, right? There are ways to get access to private companies, more ways now than ever before. And I think that's net a positive for all of us, especially those of us that aren't institutional investors. Okay, here's the deal. We got to end the show because Benzinga Live I think they are live right now. So I got to end this show. I'm going to redirect you over to Benzinga Live. Please, please, please smash the like button. I appreciate that. Please remember when I said at the top of the show that all the companies that were here paid to be here, but none of them knew what I was going to ask them. None of them knew what you were going to ask them. I hope I answered as many questions, or I asked as many questions from the chat as I could. Any feedback, email us, shows@benzinga.com. I will see you guys over on Benzinga Live with Aaron Bree, and that's it. That's all I got. Okay, so hit the like, hit share, hit subscribe, do what you do, and how do I end this thing, Aaron? Where do I go, AT? Let's end it with an ad for our swag store. Merry Christmas, everyone. Buy some Benzinga swag.